Did you know you can get a copy of the Edge Finder completely free with our sponsor, 8cap? 8cap is a super well-known brokerage that has been in the game of CFDs for a long time. And if you are interested in switching your brokerage to 8cap, they can actually purchase a copy of Edge Finder on your behalf, making it completely free for you. This is an offer our team has worked out to make the Edge Finder a completely free to access tool if you move over your account to 8cap. Here's how this works. It's pretty straightforward. If you head over to our website, a1trading.com/8cap, you can explore this offer in more details, including all the terms and conditions. But basically, the high level idea is if you create an account through that specific page and you meet the deposit requirements, 8cap will effectively buy a copy of Edge Finder for you. Now, please note this is unavailable to US traders, but for my friends outside the United States who trade CFDs and you like the brokerage 8cap after exploring it on this page that is linked below, then maybe you consider taking advantage of this offer. We've had a lot of people do this and it makes the Edge Finder completely free, which is a hard price to beat, by the way. It doesn't get much better than free. And it's a win-win-win. 8cap gets a new client, you get a great brokerage, as well as access to our software, as well as other stuff on that page. You can get access to free memberships with us, Stockbox, etc. at no cost to you. You just move over your trading to 8cap. So the full details and terms and conditions can be found on this landing page, again, linked in the live stream chat or in the description down below. Please also make sure to do your due diligence to make sure that 8cap is a good fit for your trading and meets all your criteria for what you're looking for in a brokerage. On this landing page, you can explore the different product offerings that you get access to from our store completely free if you deposit certain tiers within this list. And the cool thing about this multifaceted offer is that even if you have a lower capital basis, why not move your account over if you like the brokerage, you like what you see there, and get something for free out of it. I think this is a really cool offer that they've set up with us, and it is sort of a co-branded offer by 8cap sponsoring A1 Trading. So check them out. Again, all the information can be found on that landing page, a1trading.com/8cap, or found in the description or live stream chat below. Thanks to 8cap for sponsoring. Now back to the stream.
Good morning, everybody. Happy Thursday to you. Hope you're all doing well. I believe we just had some unemployment claims, if I'm correct in thinking. Let's see. Yes, unemployment claims came in line with expectations, 226K versus 225K expected. Philly Fed Manufacturing Index came in just slightly higher than expected. And this morning, I always have to remind myself how this works. The UK had their bank rate votes, which is a unique thing that they do. The first number is how many voted to increase. Second is how many decrease. Third is how many hold. So two committee members in the Monetary Policy Committee for the UK voted to hike rates. So a little bit more of a hawkish tilt for the Bank of England here this morning. They did, however, keep rates unchanged, which was in line with expectations. The Swiss National Bank also saw rates remain unchanged at 0%. And labor data in the UK coming in lighter than expected, with claimant count change coming in higher than anticipated. So interesting. Average hourly earnings index 3 months quarter, I guess. I'm not exactly sure what that stat is, but came in higher than expected. So some growth on that side of things. So a little bit of mixed data that this morning for the UK. Let me just check really quick on the British pound, because I do have a short position still open on my UK or my, British pound versus US dollar. I'm still in this position. And I'm going to do this really quick. I'm going to change it so that you can see this on current interval and above. So I am still short. Hold on, let me do it with the other one too. I am still short with the, here we go. Let's see. Does that work? There we go. Okay, so I still have my secondary half of my position for the pound short. It's going really well. A lot of my trades turned very green this week, which is awesome considering I sat in this GU short for the last like 3 weeks or 2 weeks. Crazy. King of Kings 864, $5 donation. Thank you so much, man. Yes, sir. Good morning, everyone. Passed my phase 1 of my Ola Prime accounts. Caught the signal off Edge Finder. Hashtag game changer. Hashtag FA runs the market. Man, salute to you. Look how much green we got on the screen. Today's stream is like a green wave takeover. King of Things, thank you very much for the donation. And congratulations, man, on your progress. I love seeing those types of messages. Hey, wherever you are in your trading journey, thanks for being here. I hope that the streams genuinely help you. I want to see more traders be successful in what they are trying to do. Trading is doable. It is possible, but it is also simultaneously one of the hardest things you will ever do. If you haven't figured that out, then stick around. You'll figure it out real quick. Trading is hard AF. But hopefully with these streams, the content we're putting out, the tools that we offer, as well as the free tools that we offer on our website, I genuinely hope it's a cool way that we run our business. We offer a lot of free stuff in the hopes of helping people out in their trading journey and spending a lot of time with us. Sign up with our, referral links, etc. It supports our business. So it's a win-win. We genuinely try to help traders, and it genuinely is how we make money with the business side of things. So real quick, can I just show you guys something? I know I've been mentioning it a lot, and my regular viewers are going to be like, Nick, please shut up about this. We have been like overhauling our website with a bunch of free tools. If you go to a1trading.com, do me a favor. If you do me one favor today, if you're a stream viewer, I've got something for you. This is a present. This is a gift. I promise it is actually free and genuinely helpful. Head over to our website, a1trading.com, under tools. Check me out, okay? We've been working our butts off building some free tools for traders. We have free position size calculators. Whether you trade Forex and CFDs, futures, whether you're a prop firm trader, like if you're a prop firm trader, check me out. This is cool, man. This is cool. Prop firm calculator, okay? So this will help you to manage your overall max drawdowns to keep you in line with your prop accounts. Again, totally free. We're just adding stuff to the site because, again, we want people to come over to the site, explore it. And hey, if you're looking for prop firm discounts, head over to our prop firm brokers section, etc. We have prop firm discounts that we're putting together. Again, all of this stuff is free, but not so free. It's affiliate marketing, right? Like we offer free stuff with the hopes that you'll support our business through our affiliate programs that we have with sponsors of the show. I mean, that is what keeps the lights on. That, and obviously we sell Edge Finder. But there's a lot of cost that goes into these shows. We love doing it, but we have, a staff of people. It's the easiest way to support our business that you could possibly do if you're a lover of the show. Hit the thumbs up button. Second easiest is to bookmark our website and use the free tools over there. Anyways, I just copped a 200K account already funded with Ola Prime. Wow. Zinni, congrats. If you guys are an Ola Prime fan, I've got something else for you. I know. Last promotion, I promise. Actually, this one will be really quick. I'm going to switch over the screen here. Hold on. Where is it? I got to find it. Ola Prime. Boom. We have a 35% off discount code with code A1 Live. So scan the QR code if you're an Ola fan. Ola Prime, like, gosh, man, they are like taking over the space. Everyone seems to love Ola Prime. So anyways, they are a supporter of the show. Transparency, it's a referral link. It's an affiliate program or a sponsor. So disclaimer, do your due diligence, check them out for yourself. But if you do like Ola Prime, a lot of people seem to love them. They offer Forex, CFDs, futures, etc. A1 Live gets you 35% off any challenge. So I'm still short gold. I've got several positions on here this morning. I am short gold. I've trimmed my stop loss. My initial stop was about 2 times where it currently is. I have taken that stop loss down. I am sitting in gold shorts. I'm also simultaneously sitting in dollar longs. This has been a good week for dollar longs, man. It's when these happen, you gotta take them for what they are. Like, it's rare that you have like all your positions go in the correct direction for you. And if you're having a tougher week, I have a quick message for you too. If you're having a tougher week out there, I got something to share with you. So I posted this because it is very easy sometimes to get caught up seeing someone like me, like some random guy on YouTube, talking about his trades that are going really well and feeling like, gosh, what am I doing wrong? Look, we've all been on both sides of this. You've had really good weeks before. You've had really, well, maybe you haven't if you're newer to this stuff, but if you've had really good weeks before, it happens to everyone. Like, you're going to have good weeks, you're going to have bad weeks. Yesterday I had an incredible day. Like, the Fed meeting went like perfect. Like, everything played out. Dollar went ripping to the upside, and I'm very positioned for that. But I pointed out that today, I posted this yesterday, today was a very solid day for my current trades, dollar longs, gold shorts, and a bit of recovery, not too much on my bond shorts. By the way, since then, my bond shorts have they're stopping out. Like, that trade is not working out. But my US dollar longs and gold shorts have been obviously really strong. But I said, don't read too far into it, because I certainly will not. It's just one day, and one good day means very little in the grand scheme of a trading journey. What matters most is your results over the next 1,000 trades you take, not the current trades that you're in. If the current trades you're in mean so much to you that you can't be thinking long-term, that you can't be thinking about your next 1,000 trades, you're not trading a system. You're trading right now like you're a junkie with the current positions you're in. You're obsessively focused on them. And I'm speaking from, like, this is what all of us do when we are kind of newer to this stuff, is people get obsessive about, like, oh, gold's got to move up, and if it doesn't, my account's going to blow. That's not trading, man. That is totally gambling. Because good trading is like, you're agnostic to what happens with the next trade. It's about the next 1,000. So whether you had a good or bad trading day, it shouldn't matter too much, as long as you are managing risk effectively and trading with a long-term edge. I know this is easier said than done, but I'm telling you, that is the mindset of professional trading. Your current trades should never be so impactful to your trading account. It should always be about the next 1,000 trades. And that frees you in both directions. Like, when you have incredible moves going on, it's like, oh, this is awesome. But it shouldn't be destructive when things are going wrong. Like, I've had weeks in a row where everything I touch goes absolutely against me. And that's inevitable to every trader of every skill level. It is going to happen to the most professional traders in the world. They're going to have losing streaks for a few weeks. So if you can guarantee that you're going to have a losing streak, then what should your position sizing be? Small. It has to be. That's the only logical conclusion. Like, you can re-engineer profitable trading and realize we have a known in trading. We know things are going to go wrong sometimes, and they're going to go wrong for longer than we think they're going to go wrong. Okay? Every single person, regardless of all the hindsight warriors and geniuses, the keyboard warriors on social media who, sound like they're always winning. Nobody is always winning. At the end of the day, you have a guarantee in trading. You have a guarantee you're going to go through drawdowns and losing streaks. If that is a guarantee, then what should your position sizing be? Meaning, you could have a drawdown starting today for the next 3 weeks. Your position sizing has to be small. It has to. There's no alternative. If your position sizing is big, you're not trading, you're gambling. Because one bad losing streak sets you out of the game completely. Anyways, with my current positions, how am I going to manage stuff? So I took some partial profits on euro dollar and pound dollar. I took half of my position off on euro dollar and half of my position off on pound dollar. Both of these trades obviously moved very sharply to the downside following the Fed meeting or during and after. Dollar, a lot of strength coming in. Now, what's not going so well for me is my TLT shorts. This is going to stop out today. So check me out. This stinks because this is the downside sometimes of trading ETFs. So when the stock market opens up in 45 minutes, I will get stopped out of my TLT position, plus more than I had anticipated, because the market is currently not yet open, 9:30 a.m. Eastern. So I will take a loss on TLT shorts. That did not work out for me this week. But again, nothing's going to be perfect. I've got several trades working really well and one trade not going so hot. Oil is also lower. We're down 0.5% again today. So again, it looks like we are, Trump signed the MOU. So it looks like we are probably going to get some kind of cessation of the war, which again, markets are certainly welcoming. You've got stocks popping back higher today. And, probably a little bit of confusion. Why is the end of the war not sending dollar lower? Well, again, I think right now you've now got the new narrative of we've got a Fed that looks hawkish. That hints why, gold, it popped a little on the idea like, oh, we're going to sign, things are going to go well. And then completely erased that, right? Here's your last night, like you had looks like the end of the war, and sellers came in and punished gold right there. Like you had a huge rally overnight. Like I was not really looking at the charts that much during this time. But we pumped on gold like from the lows, 2.6%. That's nothing to scoff at. And then came all the way down another 2%. So gold, at least right now, from a technical price action perspective, continues to look bearish in my view. Getting technical on gold for a second. Have we filled this gap? Well, let me look actually, because I'm not sure. So depends how you want to define filling the gap. If you're filling the gap in regards to just the wick, then yes, the gap has been filled. If you're talking about the close, then yes, it also has been closed, I guess. So this is so interesting. Technicals are so interesting like this. Gold perfectly filled the gap and found a bounce last night. If you are watching gold from a technical analysis perspective, like a day trading perspective, if you're watching the 1 hour, watch this. Watch this level. If this level breaks, you probably have gold making a push, in my opinion, down to your next kind of major spot, which is going to be down here around the 4,075 to 4,025 level. That's the prior low. Gold pumped real hard the last, 2 weeks. I guess, when is that? June 10th. Yeah, like the last week and a half, right? We pumped real strong off the lows, but you have to remember the context here. This is still a daily chart downtrend, and we're still below the 200-day moving average. Like, my skepticism on gold kind of remains rooted in the idea that we have lost the 200-day moving average. All of our moving averages, except for the 200, are pointing down, but the 200-day has been lost. We are below all of our moving averages. We are on the 4-hour chart reacting negatively to resistance. So look, it's uncomfortable for me to be short metals. Like, if I'm being candid with you guys, I am a precious metals bull. Like, through and through, long term, I have made substantially more money being long metals and riding them to the upside than I have on the short side. Because, to be candid, we haven't really seen a bear market in precious metals in a long time. But I am a trader. I am not, I am an investor as well, but I'm very active and I'm focused in on what's happening right now. And what's happening right now is, well, let's look at it. Again, macro kind of ruled this week. Can I just say, macro kind of is on top. Like, bow down, everyone, because my goodness, man, we all need to praise the macro world, because my goodness, like, everything in macro, just like, dollar looks so strong. Let me explain. Inflation still on the rise, despite the ceasefire or the end of the war. You still have some sticky inflation that may remain persistent for a while. The producer price index came in higher than expected. CPI met expectations. If anything, CPI was a little soft, to be fair, because core was a little soft. But PCE, we get that data point next week, I believe. 2-year yield, I think we might lose this reading pretty soon. Like, the 2-year, actually, I don't know. 2-year yield was like a rocket ship yesterday. Short end of the curve is fully telling you that the bond market thinks the Fed's going to hike rates. That is what this is telling you. The 2-year yield is saying, instead of pump it, it's hike it. Okay. That's what the 2-year yield is telling you right now. The way the market read into the Fed press conference and the votes that we saw, the dot plot, was they are going to hike rates. Because 9 out of 18 members said so. They think that they're going to hike rates in the future. I believe the December meeting. So you have that circumstance where you're like, okay, the Fed is super postured for rate hikes. That is not a good story for gold. And we have talked about on the show quite a bit. You can never forecast these things perfectly, but we have talked many times on the show about thinking there's not a reason for the Fed to be cutting rates right now. Economic growth has been upbeat versus expectations. Jobs market data has been upbeat versus expectations. Inflation has just started to kick off to the upside. Now, it's expected to stay muted, like not expected to be a crazy, crazy run up in inflation, because now the war ending, like that may start to roll off, like some of the gas prices coming down, et cetera. Like oil prices are clearly moving lower. That's a good thing. But still, in the meantime, you have some inflation that could pass through, and we don't know how fast it will pass through. Okay. So you have this situation where inflation is still sticky. You have jobs market data that's been coming in better than expected. And did you guys notice something during the Fed press conference yesterday? Notice how they spent very little time talking about one of these things and a lot of time talking about the other. Let's read through the lines here. Which did you hear them talking more about yesterday, or Kevin Warsh talking about? Did you hear more conversation around the jobs market concerns or inflation concerns? It is so glaringly obvious if you listen to the speech which one they're more worried about. Glaringly obvious, it is inflation. Let's think about this. If during the press conference he mentioned jobs like not even like so few times, like jobs data was so few times mentioned, yet inflation was mentioned constantly throughout the press conference. You can't cut rates and expect inflation to just also come down easily. At least that's traditional Fed thought process. Granted, Kevin Warsh kind of he seems to kind of point to the idea that like you can have low rates and inflation doesn't have to go crazy. But it's very difficult. It's very difficult to muster that. That is a Goldilocks scenario, to have lower rates, growth explode, and inflation not go crazy. Right? So I have a little bit of skepticism on that side of things. But my point is they're committed. We kept hearing the commitment to fighting inflation, to getting prices back under control. If that is what they are focusing on in conversation behind closed doors, there's not even a remote mention of rate cuts right now. The market read that as dollar bullish, right? That is why dollar is on top. Dollar broke through the level that this had been my multi-month target to see the dollar make a move back up to 100. And I still think, I've said it many times, I still think that we are likely going to 102 on the dollar. I don't have a strict target on my trade for the dollar. I'm just mapping. Actually, what I am really truly doing is with my UUP long position, which is an ETF that tracks like the dollar. It's like DXY pretty much. I'm probably going to close that out or another piece of it out if we hit targets on my euro and pound dollar shorts. And don't worry, there is a task force for that. You'll be happy to know that there's a task force for that. I loved that expression yesterday. It was so funny. Anyways, stocks actually rebounding sharply here today. We've said it over and over. Stocks are really hard to get bearish on for me until you see earnings actually materially worsen. Right now, you're just in an earnings super cycle. Stock earnings keep coming in better and better and better. So that's just a hard one. Like, this is why being a bear in stock land is like the hardest thing in the world. I have my concerns about inflation. I have, my concerns about rates going higher, but I'm not going to short stocks. Like, it's just such a difficult trade. I've done pretty well so far with like short gold, short bonds. I've done mixed. I've had a couple wins, couple losses. Like I said, I'm probably going to get stopped, or I am going to get stopped out on this TLT short position today. Oil's moving lower, so that is forward looking decently good for inflation. But yeah, you have some interesting moves going on today. Stocks like Nasdaq, look at this. Nasdaq perfectly bouncing off of past resistance, turn support. Intraday, it was like, you just scooped the lows and then recouped. And this is just, again, being a bear in stockland is like so difficult in a bull market. Your dips are so brief, and then the buyers come in, right? And that will change. Like, understand, I'm not saying it's so, I know what it sounds like is when you say it's so hard to be a bear, meaning then you could take the opposite and say, so is it so easy being a bull? Well, right now it is. Right now it is. The problem is when it changes, it will be very hard to be a bull. Right now, and I mean, this is trend is your friend, right? This is trend following 101. It's like, it's easier. I mean, it's still hard. Everything in trading is hard. It's simpler to be with the trend than to try and fight it. At some point, the trend breaks, the trend flips, things go the other way, and it's not so easy to be that bull anymore. In fact, there are rare times where being a bear actually is a little bit easier. But right now is not that time. You are still in bull territory, in my view, until this cracks, until it breaks. There's just you're just going to bang your head against the wall trying to be bearish or short on the market. It's just such a difficult trade. Anyways, Russell also looks really solid. Dow Jones looks solid. And candidly, I am still bullish on the Nasdaq. I wanted to get long around these areas. I've talked about how I've been getting bullish readings on NAS recently. So from a trade perspective, I am looking for some trades long the index on pullbacks. So I'll keep an eye on it. But I do, from NAS perspective, if you're watching NQ, if you're watching NASDAQ, whatever, QQQ, whatever you're trading, watch this level here, right? That's going to be obviously where we topped out. If you can get above that, we're probably, in my personal opinion, not financial advice ever. As always, it's rolling across the bottom of the screen in the disclaimer and on my charts here. It's not financial advice. We are sharing thoughts and opinions only here. But with the NASDAQ, I think if you start breaking through these levels, it's just more, passive flow into the NASDAQ. There's just this never-ending uptrend, it feels like. And, it's one of those things, you trade it till it's gone. It for me, trend following is a discipline because it can feel very uneasy. You're like, I'm paying high prices for stocks, but I'm not talking about investing here, right? Like for me, investing, no interest in investing right now in the NASDAQ. Now, I know there's lots of people who are like, I just buy regardless every month, regardless of what prices are doing. That is a line of thought. For me personally, I'm too arrogant, and I believe that I think it's better to wait for opportunities and to sit patiently in the meantime. Now, that patience has and can cost you big. For me, like sitting on the sidelines can mean missing out on really nice gains. But that's not a decision I'm going to make for you. That's a decision you got to make for yourself. If you're watching stocks, are you the type of person who says, I'm going to be agnostic to price and just buy, quality companies every month, which obviously in hindsight has been the right thing to do the last few years? Or are you going to wait selectively for dips? Because there are those of us who believe that the stock market won't go up forever and that there will be times where the thing goes down. And I think that waiting for those times presents some really good risk-reward buying opportunities. As we speak, I think the market is expensive. I think the risk-reward is not phenomenal. From a trading perspective, I think momentum favors the bull side. So if you're trading it, that is different than if you are, long and strong for the next 15 years. Like, I think those are two different, very, very different scenarios. So yeah, gold update. Yeah, so I covered gold a couple times on the stream, but I am still short gold. I'm going to look for an opportunity to take my stop loss and put it into profit. I have trimmed my stop, so I'm not really in a hurry. As long as I remain tactically bearish on gold, which I am, right? Gold has been getting a nice solid bearish reading for the last month on Edgefinder. As long as we can remain tactically bearish here with Edgefinder readings, etc., I'm going to stay short, and I'm going to just kind of nurse the stop loss on this one, and we'll see where it goes. Again, full transparency, or just candidly, this would not be the first time that it's happened if it does happen, but it's very possible that I give back all of the profits and take a small loss on gold right now. I'm telling you that because I mentioned this earlier. Trading is about your next 1,000 trades. I generally like to hold on loosely to winning positions and let them run if they want to. I don't make my gains with base hits. And I know that's not for everybody, because for a lot of people do make their money in trading through base hits. Now I do some base hit, and let me explain what base hits are for my maybe non-baseball player or people. Small wins, like stacked, like consistent small wins, like higher win percentage strategies. I don't really do that with my core momentum trading strategy. I actually do the exact opposite. Okay. So what I mean by that is that I swing for big winners. And that means my win rate is low. Okay. I have a low success rate with my trades. And for new traders, alarm bells go off. They're like, what are you talking about? If you're good at this, how can you possibly have a low win rate? Win rate does not matter if you do not consider your risk reward averages. Okay. So if I'm risking 1 and making 5, then it doesn't matter if my win rate's low, right? That's the important thing here. Also, let me just check really quick. You guys, one sec. I got to send the link to the stream to everybody. Give me one moment here. Copy this. There we go. I believe we have Miko Audu joining the stream here in just a moment to take over. But let me finish on this thought. So if you have a high reward versus risk, then this model can work. But I also recognize that this is not for everyone, okay? Some people prefer to flip these around. And there's not a right or wrong way. Meaning, if you have a low risk reward, maybe you're going 1-to-1, but you have a high win rate, then that's also phenomenal. You can do really well with that. So I'm just pointing out that this is a personal preference and a style choice. But for me, this is my choice of how I handle trades. I recognize that I'm going to, in order to catch this sort of scenario where I catch a really big winner relative to the risk that I'm taking, then I also recognize I have to accept sometimes you're going to have the heartbreak trade where gold rips back in your face, you give back all the profits, and you walk away with a small loss. But I've accepted that because you know what? Sometimes by holding on loosely, I catch that move. And that move makes up my entire year. Like as bizarre as that is, that's what I am trading for. I am trading for the runaway monster trend that comes so rarely. And it can drive you crazy waiting for that trade, but that's the style of trading that I do. It's not for everyone. Some people are like, no, I need a higher win rate than that. I can't, have one trade, and if I miss it, then it totally disrupts my P&L, right? I get it. To each their own. But for me, what's more frustrating than anything is I have a macro setup. I know fundamentally I really like a short position on gold, for example. I take the trade and I call it quits because I don't want to give back any of my profits. And that was the one. That was the one that I should have been. I was very right on not just the technicals, but the macro. But remember, I'm not just a technical trader. Like I'm very, very heavy on the macros. And so technicals, are great. Like there's nothing wrong with using technicals. But for me, my trade basis is on macro. Like I'm not looking for a quick blip here to here. That's not what I'm looking for. If I think macro fundamentals wise, gold could drop for the next 3 weeks, my gains are not in taking a quick profit. My gains are in catching the monster that I'm looking for, right? And I have to have the patience in between those trades to find the right one. Does that make sense? I don't know if can I ask you guys really quick, and then we're going to throw the show over to Miko. Give me a 1 in the chat if you are a low win rate, high risk reward. And give me a 2 in the chat if you are a high win rate. Again, nothing wrong with either one of these. These both equally can work. But you have a low risk reward. Maybe you're going for 1-to-1. You're going for the base hits, right? The small winners, but you're winning often. Which one are you? Comment 1 or 2 in the chat here. And we'll go ahead and switch over now. We're going to bring in Miko Audu to take over the stream for a little bit. If you guys are interested in some technical trading setups, again, Miko is your guy. He's got all sorts of charts coming your way just after this quick break. Stay tuned.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1 Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Okay, what's up people? Hope you are all doing well. Glad to be back. What's up peeps? What's up Bashi? Hope you're doing good. Hope everyone has been doing well. So as always, we'll go through a bunch of markets today, and of course if there's any requests, any particular markets you guys are interested in trading or just want my 2 pence, feel free to drop it in the chat. I'm more than happy to take a look, but I'm in a few positions. There's a few markets which I do have my eye on for the remainder of the week / going into next week as well. So I'll cover that. And of course, any requests, stick it in the chat. But I have still been holding my USD JPY position. I've been in that for maybe 4 weeks now, close to 4 weeks, 3-4 weeks. Still going well, still going strong. It hasn't been exhilarating. We have kind of just been steadily forming higher highs and higher lows. Nothing's really changed from a structural perspective. So I've been holding the position. The plan is for a push back to just below 162, which is the high from 2024. And I'm still expecting just naturally that larger trend on the higher time frame just to continue. That's really the idea of the trade. We had a really exaggerated bearish candle here. I believe that was just after the intervention. I was anticipating another higher low and just naturally the continuation of the trend. And so far that has been going to plan. And it looks like we're just poking our heads past resistance here, which was probably our last major obstacle for dollar yen. So hopefully we can see a push back to the high. I'll probably look to take most of my positions off, but just because it's a trending environment, I will look to try and hold and trail and just see how far this goes. But momentum still looking pretty good there. And then I recently hopped into 2 new positions actually today. One on EuroCAD, which I've been holding for about 4 hours now. So yeah, just hopped into this one recently, looking for more of a short-term play on EuroCAD. Now there is a bit of distance for this trade. It could go pretty far if the market if the market wants to play ball. There's potential downside back to these lows, 1.56, but initially I'm looking for a reaction off this high. We do have these major swing highs, which simply is the bet on this trade. Can price potentially put another one, especially coming back into some significant resistance. I'm initially looking for a push back into kind of support demand. Just slow it down. I'll see how price reacts. If things look good, then I'll try and push the trade. Trail my stops. There's significant support below us here as well. That could be a bit of an issue. But there is potential mileage on this trade, but I don't necessarily have my hopes up for price to get all the way there. As long as we can get a push here, I'll be relatively happy. So EuroCAD, I do have a short bias, especially if the reaction we saw at the high over the past couple of days, but I only entered the trade on that last 4-hour candle. Then I also just hopped into CAD Yen just literally before I entered the stream, actually. This one is coming back into a very significant level of support. We've just about rejected that level pretty well. And again, this has mileage to the upside, but I'm looking for a short-term reaction, and then we'll see how that goes. I'm still pretty bearish on the yen itself. I mean, looking across the board, the yen is still pretty weak. That could be shifting. Maybe the yen is going to gain some strength, and maybe the tide could be turning, but I'm still pretty bullish as of yet. Nothing's really changed structurally. I'm still looking at the Japanese index. That still looks pretty bullish to me. That's still creating higher highs and higher lows. So everything is still pointing in the direction for yen weakness. Maybe we are getting some signs that could be looking to turn. We'll see what happens. But again, in terms of the market structure, until something changes significantly, I'm going to keep looking to attack that bias there as well. So I've got 2 yen positions. Dollar yen, that's already risk-free, but we'll see what happens with CAD Yen, and we'll see what happens with EuroCAD as well. Other than that, I was looking a lot at some of the USD pairs this week. I didn't really find an entry, unfortunately, so I've missed out on some really nice momentum off the back of the news this week. Really nice move down, but I've been looking for shorts probably for the past maybe 2-3 weeks now. It's been quite difficult. I mean, based on how I enter the market, of course. I'm sure other people might be in some nice trades there, but I was looking for some shorts into this area. Nothing really set up well. And then, of course, we have this really exaggerated bearish candle. I'm not too far away from support right now. So I still am looking for some shorts for euro. There is still a little bit of distance, but I'm going to need a bit more retracement. We've just had this kind of follow through. I need price to have a bit of a breather, maybe come back into some structure. I'll be looking more so on the hour chart and looking to see if I can catch that next lower high for a swing into 1.14, which is my target for euro. So USD, unfortunately, not in a position there. Wish I was, but not everything goes to plan. Pound USD, pretty much the same situation there as well. Really nice bearish leg there. We're just seeing the continuation of momentum. I was looking for shorts here. I mean, to be honest, I was looking on Euro USD more, so I wasn't really planning to enter pound. I mean, they're very similar trades, similar markets. I chose to focus more so on euro. But yeah, pound, basically the same idea here, respecting that zone really well. Some really nice follow through. So we're going to see what happens with USD, because I do think we're coming into an interesting region. If I go to the DXY really quickly, I do think we're coming to a very interesting region where if we could see a significant break, I do think there's a lot of upside. Now, whether fundamentals will follow suit, that's a different story. But from a technical perspective, if we can see a strong break of this resistance, a breakout of this range, I would expect a lot of upside. Of course, we'll see how follow through happens. If the breakout sticks, it could turn into a false breakout, etc. But this has been in a range for about a year, and it looks like the market's quite exhausted lower. We're starting to form some higher lows, and we're seeing some strength to the upside. I wouldn't say we've got a breakout just yet, but that's what we're kind of eyeing up, or at least what I'm eyeing up right now. So if I can see a strong break through this resistance, there's a lot of room to the upside, but at the very least, I'm looking for a push back to 104, which is kind of like the midpoint of this pattern. You can kind of see that price has been expanding, higher highs, but also lower lows. And it looks to me that price has found another base, another low, similar to what we did over here, similar to what we did over there, kind of looking for that pattern to repeat and naturally price to come back to the equilibrium, the middle of the pattern, you'll say. There is, of course, potential for something like that as well. But again, you don't necessarily need to forecast that big of a move to catch some decent profit. So I'm looking to see if we can return back to this 104 area. And yeah, simply if that's the case, there could be a lot of upside for USD, a lot of strength for USD, which would correspond to downside on euro, pound, etc. as well. So I do think this could be the start of a lot more opportunities. Despite missing out on this move, it might get better. So yeah, I'm keen to see what happens. And of course, if we take a look at pound USD and we scoot to the higher time frames really quickly, you can kind of see pound USD may have something similar there as well. It's been long-term range similar to the DXY. If this breaks support, there's a lot of room to the downside, possibly even a push back to these areas. But again, we'll probably leave that discussion for another day. So yeah, I do think there's some interesting opportunities in USD coming our way, but going to be a bit more patient. I probably would wait for maybe like a strong weekly close above that DXY resistance. And then I would be looking at some breakout opportunities and hopefully some trending conditions, but I wouldn't say that's there just yet. We'll see what happens by the end of the week. Going to some of the metals. Metal wasn't really planning to trade this week, to be honest. So I looked at this one yesterday on my stream over the weekend, but it wasn't really a part of the plan. I was looking for another push up higher for gold back to 44.40, 44.50. And then from there, maybe we can see some nice selling opportunities to come back down. But of course, we've just had some USD strength come in. So of course, gold has reacted pretty bearish to that. Now we could just drift back to the low here. That could happen. Yeah, this is still very much my number one choice if I was looking to engage with gold. I want price to come back into the zone, see how he reacts. Excuse me. If things look good, I do think that's a really nice place for a short, and simply just looking for the next lower high in this sequence here. So yeah, I'm still pretty bearish on gold. Also with gold as well, it's interesting because although I'm pretty bearish with gold in terms of like the market structure, mainly on the 4-hour chart, I also do kind of like the buys coming back into this zone here as well. So if things shift, maybe we see a lot of bullish pressure come in, market structure breaks, I will turn bullish pretty quickly for gold. But at the moment, momentum's with the bears and everything is still pointing down. So yeah, I'm still bearish for now. But yeah, this is really the area which I wanna see price drift to, and then we'll see if we can get some opportunities past that, but we'll have to see. Silver, very much a similar situation there as well, which is price had a pullback respect to that area. Of course, the news came in, USD was very bullish. We had a nice reaction as well. Now, silver's kind of tested the area I wanted price to test. Again, I wasn't really looking to trade silver this week, but really nice reaction at that level. And now we have seen some momentum. So with silver, I actually still expect this low to go here. I actually still expect that low to be taken out, similar to what happened with gold and some of the other metals. I still do think there's a bit more downside for silver. I'm looking at this kind of 55, 52.5 zone. That to me looks like a bit of a draw for price back into those areas. Maybe some buyers could be looking to really get involved at these prices, because at the moment the bears are still very much in control. Momentum's down, lower highs are consistent. I do think support is likely to go, and especially with price now holding onto that level as well. So I would suggest, if you're keen to trade some of the metals, particularly gold, particularly silver, I think if we could drop a little bit intraday here, I'll drop to like an hourly chart. If I drop to like an hourly chart, yeah, I like the idea. I mean, we already had a nice sell there actually. When was this? This was 2 a.m. So this was during Asia, but a really nice break and retest of that range. Lovely range that lasted a couple of days there, a few days. Strong break, of course, with the news. Lovely retest and a nice continuation. I mean, if price was to come back and revisit that, I still think that's a pretty appealing place for another short opportunity as well. And I wouldn't be surprised if we are coming a lot lower too. So there could be some nice risk reward opportunities. But yeah, silver's pointing down, gold's pointing down, metals in general looking pretty bearish. And of course, if that USD strength continues, you'd probably expect the metals to be pushing down as well. Hope everyone's doing good. Welcome to the chat. Of course, any recommendations, put it in the chat. More than happy to take a look. But yeah, in terms of the metals, I'm still pretty bearish. Then in terms of some of the crypto, I think they've been pretty interesting as well. Of course, they've had their reactions to the news, but nothing really dramatic, especially compared to the metals and to the FX pairs and indices to a degree as well. But yeah, we have this kind of flag pattern for Bitcoin, which I'm quite interested in, because although Bitcoin is coming to some interesting prices where maybe, you know, some players that are looking for investing opportunities, just looking to buy and hold, are starting to be quite interested in some of these prices, 60, 50K. You know, this is pretty much Bitcoin in half price. So I do think we're coming to some areas where things could get interesting, start to turn pretty bullish. But just looking at the technicals of price alone, after all, yeah, I'm a trader first, so I'm always looking at what the tradable opportunity is. Things still look pretty bearish. I mean, this upside move is still really corrective, not really showing much bullish strength. So even if we do see another bullish swing, unless it has a very dramatic impulsive move and kind of breaks out this channel, I would be expecting to see Bitcoin eventually just break low and probably come back to support here. So in terms of the immediate future, I'm still pretty bearish with Bitcoin and a lot of the other cryptocurrencies. I'm very much on the same idea as well. I was doing some analysis yesterday for Ethereum too, and we kind of got that similar flag pattern here. As we can all see, you know, I would be looking at price, maybe have another bounce, but we could very much see price continue a lot lower. Let me just remove my drawings. A bit hard to see price there, but I'm sure you guys get the idea. So very, very corrective moves. Yes, we had a quite an impulsive move here, but hasn't really done much. So I still lean pretty bearish there. And again, that kind of just feeds into the buy of USD strength. And if we do take a look at the indices, I was buying US 30, but I did get trailed out of that position last week Tuesday. I think it was last week Tuesday. Yeah, it was last week Tuesday. So I was long a few weeks back. Things were going pretty well. We had another big retracement. I did get taken out of that position, but yeah, since then the market's had a pretty dramatic push, and we're looking pretty bullish again. So yeah, I mean, with the indices, I would still be very bullish. US 30, I'm still very bullish here. I would like price to come a lot lower before I do get interested in opportunities again. But overall, I'm only looking to buy. I'm only looking to take this one higher. If I take a look at the Nasdaq, yeah, Nasdaq I actually really like, to be honest. Nasdaq I like a lot. Really nice break and retest. It kind of filled the gap from coming into the week. Really nice rejection there. This is the news yesterday. So we had that selling pressure into a significant level of support, and prices basically bounced immediately from that zone, kind of showing that the buyers are not playing about at all. You know, a strong push into a level, buyers shot this right back up again. So I would suggest, if you are looking at lower time frames, there might be some nice pullback opportunities to ride this back to the swing high, potentially even new highs as well. I mean, I wouldn't be looking to buy just yet, especially if I'm looking at intraday buys, because we are about to push into resistance there. But let's say if price can get a significant break of that, I think the next down move after is probably your opportunity to look for a buy. Of course, we have to see how the breakout looks, how the retracement structures itself. But as long as we can see some impulsive momentum, some intent to go higher, and a fairly corrective move down, that looks to me like potentially a really good opportunity. And you've got targets back to highs and etc. Maybe beyond that as well. So yeah, I'm actually liking really what I'm seeing with Nasdaq in terms of the buys. How's the S&P doing? I haven't actually looked at that. Today, I would imagine something similar to the... No, not really. I would say this one looks a little bit more noisy actually to Nasdaq. Nasdaq looks really cleaner in terms of the price action. US 30, not quite. I mean, a very similar breaking retest going on, but I do think Nasdaq looks a little bit cleaner, especially with the S&P's got some noisy structure just above our heads there. So if I was really looking to trade the indices intraday, I would probably ignore what's going on with the S&P, ignore the Dow Jones, stick with the Nasdaq there. I really like what I'm seeing. I mean, again, I would expect the S&P to to drift higher as well. But in terms of the clarity in the price action, I would 100% favor Nasdaq at that point. I would say if we can get a strong break, maybe by tomorrow, I'm not sure about today, but maybe by tomorrow, there's probably a nice pullback opportunity to take it back to highs and maybe even further as well. So yeah, I mean, across the board, it does look like a lot of markets, different markets are kind of pointing all towards USD strength. USD strength. That's kind of the correlation at the moment. Of course, things can change quickly, etc. But I'm very much looking to see if I can get on that train. I mean, I am buying USD/JPY, but again, as I've been saying for the past few weeks now, I'm not really buying USD/JPY because I'm expecting USD to be strong. It was just purely because you've got that sustained yen weakness, and that trend still looked very healthy, and I'm expecting it to continue. And to my benefit, it has. So yeah, I mean, hopefully that USD strength does continue, yen weakness does continue, and that hopefully can continue to trend. I would probably be sticking with Euro USD. That's mainly the main USD pair I've had my eyes on, and I still do like this. We're still not quite yet at that support level on the daily, which I've been targeting. So if we can find another pullback, which we don't necessarily have to do, price could just keep falling. But for whatever reason, if we could see a bit of a pullback, hopefully there'll be some opportunities to jump on some shorts. I still like the downside. And of course, if we do get the breakout in the DXY, yeah, there is a lot of downside for Euro as well. Very similar pattern here. You can see we've been expanding higher, but also kind of expanding lower there too. I'm looking at pretty much a pullback to the 50%, which is roughly around here. So that's kind of where I'm expecting price to be drawn towards for Euro. And again, that's a pretty long-term outlook. It could take multiple weeks for us to get there. But if we can see some trending conditions, there could be some lovely pullback opportunities along the way to kind of ride that momentum, to be honest. So even if I don't get that trade opportunity, which I just discussed on Euro, the push back to 1.14, if this bias does come through, I'm sure there'll at least be another couple opportunities to get into some trades there for Euro USD, and probably something similar on pound, but we shall see. But yeah, in terms of the rest of the week, I think I'll just keep an eye on Euro. That looks the cleanest to me. Of course, I'll manage my positions, Euro CAD and dollar yen, not dollar yen, well, yes, dollar yen, but CAD yen as well. And again, Euro CAD is sort of similar to Euro USD short. I mean, you short the Euro CAD and USD fairly similar sometimes. Euro CAD and Euro dollar do have their correlations to a degree, so it's effectively a similar short. But if I go take a short in Euro USD, I'll be shorting on a much more intraday time frame than the full hour. But anyway, we'll see how this position goes. I'm only looking for a push here. I'll probably take a good chunk of the profits, and then let's just see what we can do. There is potential for some really nice downside, and same thing for CAD yen as well. Although I do have my doubts I'll see the full swing for CAD yen, which would be, of course, a push all the way back to the swing high. After all, if I zoom out and look at the structure I'm trading, didn't mean to do that. We are still very much in a bullish market, and there is still resistance above us, which I do think we can come back and test, maybe even break through as well. So there could be one last swing like this before maybe we drop, who knows. But I'm liking the level I'm trading from altogether. Price has been trending bullish for quite some time. I'm simply looking to see if I can continue with that trend, continue with that same momentum as well. So I'll see how this trade goes, but like I said, I'm not shooting for the moon with this one. If I can get at least a reaction of support back to this low, this kind of zone here, I'll be more than happy to book some profits, remove risk, and then we'll see how far we can go from then onwards. So yeah, the plan for the week, see if we can get some Euro shorts. If not, we'll manage those 3 positions. I do like gold if it does push a bit higher. So this one I'll keep an eye, but I don't think I'll get a trade for that this week. This might be for next week. I mean, it might not even happen, but if we do get pushed to that zone, I do like the shorts up here as well. So that would be something I'll focus on again for next week. I don't think we'll see price get there in by the end of tomorrow. But yeah, I'm quite big on the DXY pushing up higher. So the main thing I want to see this week really is that strong close on the weekly chart. If that happens, I mean, doesn't mean that next week's candle can't close back below, but if I do see a strong close, that's my first indication that maybe we've got ourselves a break opportunity, and then I'm looking at 104 zone there as well. So that will already set the tone maybe for the next couple of months, and we'll see if everything kind of follows suit. But if that's the case, Euro USD, Pound USD, I'll be looking to attack those pairs short wise for the foreseeable. So yeah, that's really where my focus is at. We have come to the end of my segment, guys. I do hope you guys have found it useful. If that's the case, make sure you do drop a like on the stream. Check out my channel if you are interested to see more of this similar type of content. I produce it every week, so if you're interested, feel free to check it out. But guys, hope you had enjoyed yourself. Thank you very much for having me on. Hope you all guys have a good day, and I'll take you. I'll take you. I'll see you all next week. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello. Happy Thursday, ladies and gentlemen. Hope everyone is well. Hope you're all having a good week. So yesterday was interesting, and it's leaked into today as well. US dollar looking like we want to break out of around the 101 level, which is very interesting. Bashi, Sluggy, good to see you guys. Thank you for being here. So yeah, in terms of positions, not much has changed on my side. I liquidated my losers, which were dollar yen and gold. Didn't take much of a loss. Like I said, they were both pretty small trades, luckily. So that was quite nice. But Aussie Swiss is running really well. The pound Aussie is running really well, and the euro dollar is running really well also. So overall, I'm positioned pretty nicely. Like I said, I liquidated the losers and letting the winning trades run. But yeah, not much to do here. So with euro dollar, I'm actually looking to scale into this position again. So what I really need to see is price come down towards the 1.4 level, start retesting these lows. Then that will allow me to move my stops to break even. Once that happens, I can start looking for a scale in on maybe a pullback or rejection of this level, and then look for a continuation lower, and then maybe another scale in here. We'll see. It really depends, obviously, how the landscape develops, because I think 1.4 is a good target, but I think that's kind of a what's the word? Sort of a conservative target, really. I really think euro dollar can start going towards 1.2 and maybe lower. I don't actually have a solid target at 1.05. That's not my base case, but I think that there's a possibility that could happen if we see the Fed continue on a hawkish path and we see the ECB pivot a bit more dovish. Have I tried trading binary options? No, I have not. I did, well, no, it's a lie. I didn't look into them at all. I remember when I first started trading, one of the ways I got into trading was I was talking to a mutual friend, a friend of a friend, and he was saying he traded penny stocks. And I was talking about all this sort of stuff, and he said basically one thing that he learned was to never touch binary options. So from that day on, no, never looked into it, never tried it. But I also heard that they're not good. they're quite dangerous. So yeah, Nikkei needs to let us in. Yeah, I know. I'm waiting very patiently on the Nikkei, very patiently. It's tricky because I'm not really sure what to do here. So I think this would be kind of the best option at the moment. So if we can theoretically top out here, a 50% retracement from this level would be a really nice gap fill and a potential area for a continuation to the upside. So I think overall it's still a good buying opportunity. But again, as you said, where can we get in? We just need to wait for that pullback. How do I make so many videos? I only make one a day, and I don't edit them. I just cut them up and throw them on YouTube. And to be honest, ChatGPT does the thumbnails. Kind of, I'll take a screenshot of the chart, put some text on it with an arrow, and then, depending on the vibe of the video, I'll tell ChatGPT to make me look in a certain way, and I'll slap that on. And there we go. It's done. It takes maybe half an hour every day. My strategy has been hedging both risk off and risk on setups to avoid spike fluctuations in the equity in Trump's tweet. Oh, Trump tweet environment. Yeah, I think that's probably been a pretty good play, actually. Although we did get the peace deal signed, didn't we? Yes, peace deal weighing on the dollar. However, that's been completely overshadowed by the Fed yesterday. So I don't think the peace deal is much of a big deal, to be perfectly honest with you. I think that's getting priced in, along with a bit more of a hawkish pivot on the Fed. So it's kind of just a net positive overall. Henrico, I'm good, thank you. How are you? I like dollar longs and Nikkei longs in the portfolio. Yes, so do I. So I am starting to become very bullish on the dollar. Obviously, I already am with my euro dollar shorts, but the next catalyst for me to start really getting a bit more aggressive would be the break and then a retest of this level and a rejection to the upside. I think obviously the dollar is bullish fundamentally, but if we could get the technical catalyst, which in my opinion would be the break of this level, it would be a very, very good opportunity to buy the dollar and essentially look to hold it in towards 110. So if that does happen, euro dollar is the option, like I said earlier, but the other choice would be pound dollar. I do really like pound dollar, but would I want to go euro dollar and pound dollar at the same time? It is very correlated doing that. So we'll see. But I am expressing my bearishness on the UK via pound Australian, which is working out quite well so far. But yeah, as back on topic, I think dollar longs is a good idea. Might start making videos. Yeah, you should. I find it quite interesting making videos because I was always very hesitant, which is why I've never done it before. It's like I didn't want to give away all my trade ideas. I didn't want to make a video saying I'm selling euro dollar whilst it's at entry and give away my take profit and stop loss. And then I was sat a couple of weeks ago. I was like, hold on a minute. That's literally what I do every day on stream. Like, why am I being paranoid about that? So decided to just do it. And to be honest, it's working out quite well. I've never had the views so high. And, I'm on track to make $60 this month from YouTube. I don't want to flex on you guys, but how could I say no to $60? Gotta say, James, I'm surprised how we didn't correct yesterday's FOMC. I think it is on the way. It will happen eventually. So that's the thing with these types of moves. You see them where they're very aggressive. And I think I said this before. When we get this type of thing, and then we start to see what looks like a correction, this is probably very unhelpful. But these types of periods, generally you would want to avoid, because what you will often see is the newer retail traders will see this and they're like, FVG or whatever it may be, whatever they want to call it, it needs a correction. And then they see the bullish candles forming and they'll start buying. I've been in that trap before. And then it just continues lower. So I always, well, not always, that's probably not the right way. Normally we'll look to just completely ignore the next couple of candles after such a large move, unless it's something that's not that big, that had a bit of, maybe an overreaction. And I am very sure of that. Then maybe I'd fade it, but that's very rare. Fair point. Yeah, YouTube pays big bucks. Don't want to give too much source. Well, no, I mean, yeah, I don't know. I think I was overthinking it, but I don't really have secret source anyway. So, like I said, I think I was being a bit paranoid and a bit egotistical, to be fair. It's like I don't really have that much source to give away. Ray Beast, hello, it's good to see you. I just wanted to cover the macro stuff. I'm getting really into fundamentals and macro, nothing to do with 1 minute. Very nice, Bash. It's the way forwards. It's much more chill. Holding shorts on pound dollar, fantastic. Yes, I back that idea. I think pound dollar, euro dollar, New Zealand US dollar, shorting is the way. Unfortunately, didn't manage to do this on gold, sadly, but it's fine. I took, I think it was around half risk on gold, and then I cut it for, I think it was like 40% worth of the stop loss. So yeah, really, really minor. So it's all good. Gold. Yeah, we can have a look at, oh, well, this is gold. Yeah, I'll go over gold in a bit more detail in a minute then. Opinions on Wash. He seemed very cautious. Task force. And no dot plot by Wash either. I mean, he seems cool. You know, I'd go for a drink with him, but I don't, you know, I don't have that. I don't have the emotional connection I did with Powell. You know, when Powell walked on screen, he had the aura, and you know, he was like a grandfather figure. But I just didn't see that with Wash. Nothing against him so far, but I don't know. I don't know if he can stack up to Powell. When will Marco resume DNA funded account giveaway? Marco is coming on very soon, actually, so we can ask him that. If you stay, when is it? So Alan's not coming on today. So if you stay till 10, I guess it'll be 10 a.m. So 20 minutes, I think. Marco will be on, maybe 10:15. I'm not sure exactly what's going on today. I'm just going to stay on until someone comes to kick me off. I think that's probably the best way to do it. Washington show his cards. Yes. I think the problem is what would be not ideal, I suppose, would be Wash coming in and going, what's the right way? I don't, you know, full margin is a very trader way to say it, but, you know, putting all these cards on the table and really giving away everything, I think would be a little bit irresponsible. So gold, for me, is it a hard month? No, actually it's not. I've done pretty well. I've been relatively flat. I've actually only started getting a bit more involved in the markets in the past week or so. I took a small loss on dollar yen, small loss on gold, but euro dollar is doing really well. So I've got about 2% worth of risk open on euro dollar, which obviously now the open P&L is doing very well. Pound Australian is doing really well. Australian Swiss doing really well. So I can't complain. And these markets are all swap positive for the portfolio. So euro dollar negative swaps, pound Aussie is negative swaps, Australian Swiss positive swaps. So yeah, it's going well. Anyway, someone asked for gold, and I've still not done it. So let me take a quick look. So gold is -6 on the Edge Finder. Let's see what's driving gold right now. Oh, it's -3 on here. So I'm not sure which one it is. It's either -6 or -3. So technicals are bullish. Crowd sentiment is bullish. So this is retail positioning. Institutional is neutral. Net positioning is bullish. However, the week-on-week change or the weekly change is bearish. Economic growth, inflation, and jobs market's bearish. So the fundamentals are objectively bearish for gold. The other thing, technicals are bearish. So we've got a really nice bearish trend here on the H4. Gold is still under pressure with the appreciating value of the dollar. So I think gold is a pretty simple sell. You know, it's easy to say that in hindsight because I was actually buying gold, but there you go. Technically speaking, I don't have much in terms of an entry, but what I'm cautious of is just the daily time frame. So I suppose it depends what you think. If you are keeping it, you know, rigid and systemized, selling gold is, you know, the go-to. However, if you're more optimistic on gold, I think it's a little bit tricky because last time we came down to 200 moving average on the daily, we rejected pretty hard. The last time we broke out of the 200 moving average was back in 2023, and we very quickly reclaimed this and started a bullish leg, or a bullish cycle. No, that's more than a leg. But obviously, you got to acknowledge that the situation of the landscape we're currently in is still negative for gold. So I think the base case is bearish, and the fact we've just used the 200 daily moving average here as resistance as well, I think is quite telling. So if you're an intraday trader, maybe just targeting the previous daily lows down here around 4,000 would be quite nice. It's a nice psychological level as well. If you're a swing trader, I think it might be a better approach to trail stops, because gold can be quite volatile. It could flip on you pretty much at any moment. So I think if it continues lower, it will do quite aggressively. So it's worth kind of letting that trade idea run, but of course, not financial advice. Dr. James, we have a task force. Yeah, I need to start building my own task force, I think. Build a task force to understand his task force. Wash doesn't have the aura. Yeah, no, he doesn't. We just need the memes. You know, the meme of Powell with the money printer, or the GIF. We just need Wash to start getting some of those. And I think his aura points will start climbing. You like Wash? Yeah, I don't dislike him. I mean, I don't have an opinion on him. What was he? He was on for not very long in terms of his what he had to say other than answering questions. Best time to buy DXY breaking above from a year-long resistance. Yeah, so I think it would be a silly idea to buy the dollar right now. We've already had a very good run. You know, dollar pairs are already down quite. I don't want to say massively, but they are down quite significantly at the moment. So I think if you wanted to buy the dollar, you'd kind of want to wait for two situations: either the break and a retest, something like this, and that would just, you know, prove that we can break higher and there's still buyers in the market, or you'd want to wait for some sort of pullback. The problem is, if we see a pullback from this level, it's going to be quite frustrating, because we're very likely then just back in this. Well, yeah, we will just be back inside this range. So, you know, yeah, it's tricky. I'm really banking on the fact that we're going to break higher. If we don't, I'm not going to be happy. Oh, we missed a good afternoon. Yeah, I put in the chat yesterday. We need to try and figure out what his tie callers mean. So with Powell, there was speculation about, you know, his tie caller signaled his forward guidance. So we just need to start getting that type of things with Wash, and we'll be good to go. Wash prefers a smaller balance sheet and limited mandate. Yeah, he seems like he wanted to kind of simplify, but doesn't matter. Well, that's the thing. I think we have to be Bashi. I think we have to make the most of what we got. You know, our job is extremely stressful and annoying. It can be, you know, extremely fruitful and fun at times, but I think we have to have some fun as much as we can, because our job is stressful. Otherwise, you know, we'll just be another Wall Street statistic, which I don't think I can say on here, but I'm sure you all know what I'm talking about. That was a bit morbid. Okay. So what are we doing here, fellas and ladies? US indice equity markets. Do we want to be buying? No, I don't think we do. So the reason I'm saying that is kind of twofold. We've had the peace deal signed. Now that is on face value a risk-on event. You know, that's good. We've got a geopolitical event that's coming to an end. Fine, good. But the fact that we know that investors and traders were using the stock markets as inflation hedges because they were concerned about oil. So if that's coming to an end, it might be more of a, you know, buy the rumor and then sell the news type of event, where they're buying up on what we would consider risk off. And now we've actually got the risk on news. They're looking to sell off the positions. That could be one aspect. But then even if you don't agree with that, that's fine. That's a bit of speculation on my part. We do have the Fed that is seeming more hawkish, and we've got the stronger dollar. That objectively is a negative impact for these markets. So I don't really think there's a whole lot right now to really warrant buying, other than obviously if you're a longer term sort of position trader, obviously buying is sort of default. But for us shorter term swing trader degenerates, I think, yeah, short positions may be starting to look a little bit more attractive. Glad I'm not the only one that finds it stressful emotionally. Oh, it absolutely is. You know, I think one of the things is you've got to have something else going on in life. Like if you're sat at the charts for 16 hours a day and you've got no outlet, you don't go outside, or you don't have friends, or you don't have a partner, or even small things like you don't play any games, or you don't read, or just something to get away from the market, you are going to be in a very difficult place mentally, because the human brain isn't built for trading. It goes against like almost all our instincts. So, the human perception on risk and reward is very skewed. So there was a study done, and it basically defines why traders will move their stop losses down to avoid taking a loss. It's because we'd rather take a larger loss rather than realizing a smaller loss right now. So we'd rather defer it to the future and have it worse. I'm kind of trying to reiterate it by memory, but hopefully you get what I'm saying. But yeah, the human brain is just not built for this job. So you've got to take it seriously and get away from the charts as much as you can, really. My model looks for small pullbacks. Oh, Ray, I forgot to tell you. I was thinking of you earlier today in a non-weird way, I promise. But I'm thinking about trying to build an EA. So I might talk about that another day because I'm running out of time a little bit here. But what I want to do is make a YouTube series and give maybe Claude like $500 and get it to do like deep research on different trading strategies, and basically just give it a $500 portfolio and see what it does. So I think I'd keep it simple because I'm not a huge technical guy. Basically just get it to make an EA, stick it on MetaTrader, and see how it does in 6 months. I think that'd be quite interesting. Truge came back from vacation. Very nice, Luggy. Hope you had fun. Now waiting for good pullbacks. You got no friends. Please tell me you know that meme. You got no friends. Oh yes, the football guy. What's his name? He's quite famous actually these days. Big fact, you need to rewire everything. Yeah, you do. But again, it's a job, and I think if you went to a 9-to-5 office job, you've got to kind of think of it in the same way. It's like when you get home and you're eating food or watching Netflix or whatever, you're not thinking, or I hope at least you're not thinking about the paperwork you've got to do, or what your boss said. It's the same thing with the markets to a certain extent. You've still got to be switched on and alert, but you've got to understand when to step away and to just relax a little bit. Because again, otherwise you're going to end up in a tizzy. You're not going to be in a good situation at all, and it's going to just be a nightmare. Anyway, let's move on. Let's continue with the markets. So what do we have? What is screaming for us to trade? I saw Nick said something actually in the chat, and I completely forgot to read it out. I'm not sure what it was. Maybe I missed it. Oh, yeah. I pray the S&P pulls back again today for the 4,762nd time. Yeah, me too. Psychology. Yeah, I mean, I think psychology, yes, but also no. I think it's got its place, but I don't think it is a big determining factor on longer term success. I think it's more of your own health, if that makes sense. I'm thinking of securing profits on gold. What's your opinion? I don't know what your entry is. I don't know what your stop loss is. Don't know what your risk to reward is. Don't know what the idea behind the trade. I've got no idea. So the thing is, when we're taking trades, so let's say, actually, let's use my long example. So I bought gold roughly here, and coming into FOMC, this trade actually looked quite good. We had a nice little push, and then it just dumped. So it wasn't a case where I was sat thinking, oh, should I close it? What do I do? I don't know. It's gone into drawdown. well, I closed the trade because it's not working, and we've just had a hawkish Fed. So I know that that's my signal to, okay, scrap the trade, and then euro dollar's doing well. All my other positions are doing well, so I'll double down on those ones, the ones that are working, and cut the loss early. So if you were short, you basically want to do the same thing. So let's say you were short here, hypothetically. Well, the R&R, what are you targeting? So again, this is completely hypothetical, but okay, you're in 0.4. That's not good enough to close, in my opinion, because if the next trade loses, you're still in a net loss, even though you had a good position or a profitable position. So closing it R&R wise isn't worth it. Has there been a news catalyst or anything that's actually changed in the market? No, there hasn't. If anything, it's just supported it even more because we've had a hawkish Fed. The US dollar or US economy is doing well. We're still in a bearish trend, the H4. So these are the types of questions you got to ask yourself, especially as a swing trader. Because obviously if you're a scalper, it's more technical based, how did that candle close? Okay, well, I can get out. But swing trading, you've got all these different things to consider, and you've got a lot more time to consider them as well. Trading psychology doesn't exist, it's fake. Yes, I would agree to a certain extent as well. I think it's kind of 50-50. I think the whole thing about, oh, I'm not profitable because of psychology, or psychology is my problem. I don't believe that. I think that the problem is you don't know what you're doing. So, if I put you guys, any one of you, I guarantee almost any one of you, into a rocket and sent you into space, you're going to have psychological problems. So you don't know how to fly a rocket ship, and you don't know how to survive in space. You probably don't even know how to make the food that they have in space. So of course you can have these psychological problems, but you wouldn't send an astronaut to space and expect the same thing, because they've been trained. They know what they're doing. It's the same thing. If you put a new trader in the markets, they're going to have these problems because they've got no idea. So that part I do think is fake. But still, the mental toll and the drain of, if you're on a losing streak, or you're in a drawdown for a month, it's going to be difficult mentally to deal with, because that's your hard-earned money that's going down the drain. So that part, yes. The other part, no. Do you get what I'm saying? So it's 50-50 in my opinion. But yeah. As an automated trader, for me, it doesn't exist. Validating edge. That is also true, Ray Beast. Yes. It becomes your second nature. And a plan. Yeah, exactly. I think we're all on the same page. Yeah. I just wanted to clarify my stance there, because I don't want to get misunderstood. So silver's looking good. It's a shame, really, because we were looking at silver. Was it yesterday? I think yesterday we covered silver, and I said it looked like a good technical short, but I didn't want to take it. Oh, it's annoying. I should have taken it. I should have listened to myself and just done it. But yeah, I mean, silver came into the fib really nicely here, retested almost. Actually, it kind of did retest its previous low over here within the fib zone, broken below the daily 200 moving average yet again. So I actually do quite like the idea of being short silver, but I've missed my entry, it seems. So I think the best idea really would be to scrap the previous fib we had and just wait for a new low to get printed. So let's say we hypothetically bottom out here. I'll wait for a pullback into the fib zone, wherever that may be next time, and then a rejection from that point and a continuation lower. I think that's really all I can do at the moment with silver. Other than that, I'm sat on the sidelines. I think really, if you are not already in the dollar move that we've had, you've kind of missed it. Not forever, obviously, but I think right now you've missed it. I think the best idea would be to wait for the corrections of the move we had yesterday, and then look to get in on the pullbacks. Alan in the chat. Good to see you, Alan. Hope you're feeling all right. Right, so what's going on here? I spend more time researching than looking at charts. Yeah, it does sound interesting, Ray. I wouldn't mind having like an automated system, but I've just never found anything that I really had much optimism around. Having said that, though, the research I've done on, the EAs and things that are accessible to retail is pretty limited. So I'm sure I'm missing things. Did I cover the dollar? I did, kind of, yes. So I'm still bullish on the dollar. There is absolutely no signals at the moment for me to have any negative view on the dollar. So if we look at the asset scorecard here, by the way, code elite for a discount in the Edge Finder. US dollar is getting a score of 7. We've got the 3 pillars bullish. So economic growth, inflation, and the jobs market. That's really all I care about. And then if institutional's there, great. Technical, I don't really care too much about. However, institutional is bearish, but the thing is, because this is delayed and net positioning is neutral, but it was only last week's reading that was bearish, I heavily suspect that the next COT print is actually going to be very bullish for the dollar. So I'm actually not that bothered about this one. But I think Marco's here. But I do think the dollar is really, really set for a breakout higher. So we've got the strong US data. We've got the hawkish Fed. We're almost about to break this strong level of resistance. I think we're set to go. What do you think, Marco, about the dollar?
Hello. So as far as the dollar goes, I'm still bullish on it. I think yesterday the meeting was hawkish. Well, the dot plot was especially hawkish. But I think also Warsh was more hawkish than the markets expected. I think they expected a dovish Warsh. And that, of course, made the dollar go up. It made the 2-year yield explode higher as well. I think that's going to continue. So I did take profit on the GU short, which just melted after the meeting. And the reason I took profit on this position is because we hit a pretty significant level of support on the daily and a round number, which is near 1.32000. So those are two confluences that I'm expecting a bounce. But I would love to get back in. So if I get a better price, if I get a bit of a rally on GU, I think I will just re-enter near that 20 MA. What about you? What did you think of the meeting? What's your take on the dollar and any positions with the dollar?
Yeah, no, I completely agree. I think the Iran peace deal is being eaten up. Obviously, that was on face value a negative factor for the dollar. Obviously, losing a little bit the war premium and its risk-off bid. But having said that, with the what Warsh said and the dot plot and the press conference, I think it was just completely ignored, really. And the dollar is obviously continuing higher. But yeah, regarding positions on the dollar, I've got quite a nice position on euro dollar short.
Okay.
I was actually in a very similar position to you on pound dollar at one point, but I closed that. Unfortunately, in hindsight, probably should have left that and taken euro dollar. But yeah, I was long on gold as well, which is a bit of a loss, but nothing too crazy. But yeah, I think we've clearly established bullish dollar now, so I think should be a relatively easy path forwards for us in terms of we just really need to sort of focus on buying the dollar, waiting for pullbacks, and continuing on that trend.
Would you look to re-enter GU?
I would, yes. Probably not until I've closed euro dollar, however. So I think pound dollar, I actually prefer it because I really don't like the UK. I think the economy here is struggling. However, I just kind of prefer euro dollar, mainly because of the swaps. So I think it's more of a payoff. Which one do you prefer? I think there's definitely a good argument for both, but because I've got quite a large target on euro dollar, I would kind of prefer to sit in this one for a while and just collect the swaps as it drops, and that way I can just earn a little bit more money.
Okay. And how would you explain the recent move today? So dollar is up, but the S&P is up as well. Nasdaq flying back, I would say, near to all-time highs. That's kind of unexpected in my opinion, because as the dollar gains value, you would expect for the stocks to continue selling off. And as the 2-year yield goes up, you would also expect stocks to go down. So what's your take on that?
Yeah, it's a little bit perplexing. So I think there's a little bit of a mixture. I think there's the optimism around the Iran peace deal. We've got SpaceX as IPO. In fact, actually, let's take a quick look at SpaceX. How is that doing? Interesting. It's actually down a little bit, but I still think there's optimism within the tech sector around, semiconductors, SpaceX, Anthropic, and then we've also got, OpenAI IPOs coming. So I think there's still supportive factors, but I personally can't really get behind them because I don't think that they are really worthwhile. So yeah, I don't know. I personally don't have much of an opinion, to be honest with you. What about you?
Okay. So for me, I'm going to be bullish on stocks because I think this sort of relative strength where the dollar is gaining value, the 2-year yield is going up, the Fed is supposed to be hawkish, but we're still getting stocks going up. I think that's a very bullish sign in and of itself. I know the IPOs are starting to come out, which is a very big red flag. We had Cerebral, now we had SpaceX. We're going to have OpenAI, and we're going to get Anthropic. Most likely OpenAI and Anthropic will be just pure cash grabs because, I mean, if you look at these AI companies, they all sell the same thing. I know Claude is better than, let's say, ChatGPT, but at the end of the day, it's a very, very similar product, and their edge is very, very small. So with SpaceX, you at least have that space thing that at least is building some revenue at the moment. But with pure artificial intelligence companies, I don't think there's a huge sort of profit margin, and I think they're all selling the same things. So as they go and do an IPO, it's going to be the smart money dumping on the retail. It's going to introduce a massive supply, and we could be near the top. But those things are going to come in the next 2, 3, 4 months. So until that point, I think we could actually continue going up. So that's my view currently. And I'm looking to buy the Nikkei, the Nasdaq, and maybe some individual stocks as well if I get some interesting breakouts.
Interesting. Okay. Yeah, no, I completely agree with the OpenAI and Anthropic thing. I think the problem really is that it's just not really a net positive for anyone. So they need a lot of money for data centers. They need the data centers to train models. They can't train the models without data centers. And it's essentially just a fire pit for money. We already know that banks are actually quite worried about the AI debt that they're currently in. They're currently packaging it up basically like CDOs from 2008. It's not the same thing. I don't want to cause a panic, but it's essentially the same idea.
Yeah.
So I think it's really, similar to what you said, that they're IPOing, same thing as SpaceX, and they're using the IPOs as fundraising rather than really anything else. So they can get the money and maybe, yes, dump it on retail eventually. So I wouldn't actually mind going short on things like the S&P, not yet, but I think longer term, once we've got the IPOs, once we start getting earnings that are disappointing, and once we've got maybe mass euphoria from retail, like we did with silver, I think maybe I would actually start going in some small short positions and trying to build something over some time.
So with silver, when it was right at the top, I think it was trending on Wall Street Bets. So there's a website that shows you which assets are trending on Wall Street Bets, which means there's massive euphoria from the retail. And silver and gold were trending right at the top. So when we see the same thing on the Nasdaq, I think that could be a sign of a top. We're already seeing the institutions move out of the stock market. So if I just put up the Edge Finder here, and we go to the COTS, we go to the history, we go to, let's say, the NAS, we can see that the trend is slowly starting to go down. And as far as the dollar goes, I think institutions are actually building positions overall. Yeah. And if you look at the retail, so crowd sentiment, retail sentiment history. So let's put the NASDAQ here. And let's take a look. Definitely increasing. So the interest from the retail is definitely increasing, and that's a great contrarian indicator right there. So I'm not saying we're gonna top right now, but this year very likely. Now the question is, can we go up a bit more? So can we get in some more buy positions with a tight stop loss, of course, before the crash actually comes? Do you trade stocks or do you mostly do FX?
No, I don't trade stocks. I'll trade the S&P, the Nasdaq, but I don't touch individual stocks. I just don't know enough about them. I think the thing is, the way I trade is quite detailed. So I look at central bank policy and inflation and that type of thing. I don't really have time to do the same thing for stocks because, first of all, I'd have to learn a new process, but also there's so many stocks. And so I wouldn't really know where to start. So I try to stick to what I know, and that's it. I assume you do trade stocks, though.
Sorry?
I assume that you do trade stocks.
No. So I mostly do FX, gold, indices, but I've been looking to get into stocks because like I've been reading the latest Market Wizards book, and the guys that make the most percentage, they mostly trade US stocks because there's so many of them, and they can really filter like 800 or 1,000 stocks and get the best setups out of it. So I'm trying to add it to my portfolio. A pure swing trading breakout approach, it's going to take like maybe 1 or 2 hours per day and extra, which I don't mind doing if it's going to bring extra percentage as well. But my main thing is still watching central banks, the macro, what is the Fed doing, so what is Trump doing, Middle East, and everything like that. What's your take on Middle East? Do you have a specific take, or just ignoring the headlines and focusing on the economic data?
Yeah, I'm just ignoring it, to be honest.
Yep.
I think it's a situation where you can pay attention to it, but even if you do, it doesn't really matter because the landscape we had, it was changing so often. Even if you were paying attention, you couldn't really do much with it unless you were scalping headlines. So obviously paying attention, fine. Yes, I was doing that, but I wasn't paying attention to each headline day by day and trying to trade it. It was more a case of, oh, this has happened. Fine. What can I do about that? Not much. So no, I'm kind of just going with the flow. If the dollar's strong, I'll be trading the dollar, trying to keep it simple.
Yep. So dollar is your favorite currency at the moment, I presume? And
it's becoming my favorite at the moment. So I quite like the Australian dollar again. I went for a period of trying to short Australian dollar, New Zealand. That didn't really play out too well. So I pivoted back to being a little bit more bullish on the Australian dollar. Mainly against the pound, just to more express my idea that the pound is weaker. But yeah, other than that, I quite like the US dollar to continue higher throughout the next couple of months.
And what about the weakest currencies at the moment? Pound is one of them. Which other do you have?
Probably the pound and the Canadian dollar, I would say. I think the Swiss is quite weak as well. However, I'm not a huge trader of the Swiss, but I'm long on the Australian dollar Swiss as well. So yeah, I'd say the Canadian dollar, Swiss, and the pound are probably my best short currencies at the moment. What about you?
For me, dollar favorite. So I think it's the most bullish currency. I think it could very easily break out of the range on the DXY. So let me just bring it up here on the stage. So let's go to the DXY. So we're right at resistance. I think we could very easily break out, and once we do get a confirmed breakout, I think we could continue to, I don't know, maybe 103, 104, that could definitely happen, especially if the Middle East is not resolved. So far, it's just like this is the 37th time that a sort of a deal has been declared. But again, no concrete evidence of an actual deal. So if that continues until the end of this year, I think the Fed is going to be forced to hike, and not just once, but maybe even 2 or 3 times, which the market is definitely not prepared for. I think right now we have priced in 1 hike, but if it prolongs and if we get multiple hikes, then the dollar goes to 102, 103 for sure. Or not for sure, but that's at least my bet. The weakest currencies, I would say the pound, absolutely. So that's my favorite one to short at the moment. Then I do like USD CAD to go long, although this one has moved up too much. So I would first need a pullback to the 20 MA. And I actually think the New Zealand dollar is pretty weak. So this is a short that I'm considering, because if you look at the economy in New Zealand, it's pretty bad. So I think they have priced in a lot of hikes this year, but if you look at the actual numbers for the GDP and the unemployment, they can't really afford to hike as much as they want. So I think that's a net negative for the New Zealand dollar, and I think more downside is to come. So this is actually kind of a hidden gem that I think could continue going lower.
That is a good point, actually. Yes, I quite like the idea of being short New Zealand dollar, actually, at the minute. I think temporarily it was quite strong at one point when we first got the pivot from the RBNZ. However, since then, yeah, I would agree, actually, probably being short is a better idea. So regarding the Fed, I would assume, actually, yeah, we're likely to have 1 to 2 hikes by the end of the year. It seems the market's priced in 1. So if we end up getting 2, I do think, yeah, the dollar could probably start heading towards 105. And I think there's actually cuts being priced out for 2027, or at least the first half of 2027 as well. So yeah, I think the dollar's in a really nice environment at the moment. And I would say it's actually relatively undervalued. So if we look at the weekly time frame, we've got, the year-long consolidation at the low of the sort of trend line. It wouldn't surprise me if this has been a long-term accumulation, just waiting for this sort of trifecta of rate hikes and solid data to have a new sort of bullish cycle, similar to what we've seen over every time we've come down here. Maybe not a vertical rocket to the upside, but it might be a situation where the dollar is now ready to continue higher. And to be honest, that makes the most sense to me. I don't really have anything that would tell me the dollar should be getting sold or is bearish.
Yeah, like even the US exceptionalism story, which basically means a lot of capital is flowing into the US because people want to participate in artificial intelligence. To buy those stocks, you need US dollars. So you're getting another bullish flow that, as long as the Nasdaq keeps flying, that's still bullish for the dollar. So rate hikes plus artificial intelligence, I think that creates some really bullish, a really bullish environment for the dollar. And yeah, like you said, so can I think of one bearish catalyst? At the moment, I can't. What would be a bearish catalyst?
Yeah.
Maybe that the Middle East finally resolves. I don't know. I don't think so.
Yeah, no, I completely agree. Anyway, Marco, I'm going to head off. Chat, I'll see you guys soon. Stay safe. Don't get margin called. Thank you for being here. And I'll see you all tomorrow. Marco, see you later.
See you. Goodbye. Okay, so solo segment time. Alan has a sore throat today, but he is in the comments. But he can't unfortunately join the stream. As far as the watch list for today, we have GU. So GU, I did close out the position. So this position did hit the take profit. It was a nice winner in the end. So had one position on the 2nd of June, nice winner. And then I had the second position on the 10th of June, again, a nice winner. Now, this is not how it usually goes. Usually things are not as good, but 2026 has been a pretty good year so far. So you have to go aggressive when you have good market conditions. That's one of the ways that you can really let's say increase your profits. If you can control the risk and risk more when you get A+ setups, then you can make some really decent percentage. And if you can, of course, risk less on those B setups or C setups. I usually give every single position a grade from 1 to 10 before I take it, and then I kind of get a rough idea. So maybe I should risk 0.5% on this one. Maybe this one is 1%. Maybe this one is 1.5%. That's a that's a good system to have. And usually if I grade a trade a 7 out of 10, I won't take it. So it has to be an 8 out of 10 or above. And then it depends, is it an 8, is it a 9, is it a 10 out of 10? Then I can increase or decrease the risk. So yeah, one thing that professional traders do, it's not a key to be profitable, but it's something that the professionals do, is they vary the risk according to their conviction level. Okay. So I wanted to run through the watch list. GU, I still have it. I would look for pullbacks to the 20 MA, although this is now very much overextended, so I have to be patient at the moment. We have hit a big level of support, and we have hit close to a round number, which is 1.32000. So I think we could get a bigger bounce to the upside. Now, as far as the meeting goes yesterday, so we had Kevin Warsh, we had the dot plot. Personally, the dot plot was definitely hawkish, no doubt about it. Kevin was more hawkish than the markets expected. But some traders actually believe he was more dovish than the markets think. An interesting post is from the short bear, So this guy is one of the market wizards in the latest edition, so in the latest book. And I thought this post was pretty interesting. If you want to read the whole thing, you can find him on Twitter. But anyway, he says, I don't see today's Fed meeting as hawkish. Trueflation is at 1.57. Headline CPI was 4.2 in May. Energy accounted for over 60% of the monthly gain. The composition of the dot plot was not fully hawkish. Of the 18 members, 9 saw rates higher and 9 saw them at this level or lower. Only one proposal was on the table: hold. A hike was never seriously discussed. And then I don't believe we have a cruel choice. He explicitly rejects the inflation versus jobs trade-off. What else do we have here? The only real hawkish substance, which I can definitely agree on, was the relentless inflation is a choice. We will deliver price stability. So if you watched the meeting, Kevin talked a lot about task forces. I didn't understand one thing that he is referring to when he says a task force. I don't know what the hell he's talking about, but he did also mention we will deliver price stability multiple times. And he was pretty firm in his stance, which basically means inflation is high and they're looking to pull it back, which in my opinion is a very, very hawkish statement. Plus his claim that policy is not very restrictive outside housing. That does imply room to hold tight or even hike. But he refused every chance to convert that into an actual signal. So I read it as credibility positioning, not a tightening bias. And again, the 2-year yield exploded, blah, blah, blah. So yeah, this guy, very successful, made millions trading stocks, and he thinks the Fed meeting is hawkish. He actually thinks the Fed meeting is dovish. Personally, I still kind of stand by my opinion. I'm not a regular Joe. I have been watching these events for a while now, and I've researched a lot of past Fed events. The lot was hawkish, no doubt about it. And the speech from Kevin, I would say it was hawkish. I mean, like the main thing, price stability and being very firm, a firm stance, a firm tone. Just the way that he was speaking sounded hawkish. So I'm not surprised. I'm not surprised that the dollar that the dollar exploded up. Right. What I am surprised about is that the S&P is holding up pretty well. So the S&P and the Nasdaq back near all-time highs. Like we had a sell-off, but I guess it doesn't matter. I don't know. So that's definitely an interesting development right there. Corn, or Bitcoin, not corn, is down. Gold is down. So only stocks are doing well. Only the stocks are doing well. In my opinion, that's a relative strength sign. So if you get a strong dollar, so strong dollar, 2-year yield went up a lot, and stocks going up, to me that says, look, we don't care about the higher rates. We just care about artificial intelligence. We care about companies like SpaceX, OpenAI, Anthropic, and then Cerebral, I think, is one of them as well. And I'm all for it. I want to get on the train. I want to get on the bullish train. One thing that I think that one Illuminati guy, what's his name? George Soros, right? The guy that everyone hates. And I think he's a bit of an a-hole, but apparently he's a very successful trader. And he said the toughest thing as a trader was for me to buy into a bubble. So he knew he had to buy and that he would make a lot of profit by buying, but it was tough because he knew it was also a bubble. That's kind of the experience I have right now. I'm seeing this, or let's go to the NAS. George Soros on his 8th heart. Yeah, the guy's, I don't know, he's weird. He's very weird. And but that's not the point of this stream. Nasdaq, I think it's an absolute bubble. There's a lot of debt. There's a lot of spending. All of these companies are producing the same thing. Like you could pretty much replace ChatGPT with Claude or Google Gemini, and it would be very, very hard to tell the difference. You don't need 5 agents. You just need one. In my personal opinion, they all do a very, very similar thing. So unless they can distinguish their offerings, I don't see how all of them will survive. especially because Google Gemini is great and Google has a lot of money to burn compared to, let's say, OpenAI. But what could happen is that all of the agents specialize for something else. So you get Gemini for general inquiries, you get Claude for research, you get ChatGPT for image generation, and you get Grok for generating stupid memes on Twitter, right? So that could happen, but I think the product is the same across the map. It's like all of them are selling a Samsung phone, the same thing. Or maybe one is bigger, one is smaller, one has 2 cameras, one has 3 cameras, but it's all the same. It's all the same crap. But I'll be looking to buy as long as the train is going up. I do want to mention the sponsor of today's video before I forget, which is Ola Prime. So if you guys are looking to get funded, we have a 35% off code for you, 35% off with the code A1 Live. Ola Prime. Okay. So Trustpilot, if you go on their Trustpilot, they have a score of 4.5 out of 5, which in my opinion is pretty good. And with the code A1 Live, you get a much, much better price than, let's say, FTMO. So if you're interested, there's a link in the description and get yourself a challenge. Plus, they don't have a consistency rule. If you don't know what a consistency rule is, a lot of prop firms nowadays, they implement a consistency rule that says you cannot make most of your profits in one day. So all of your trading days need to have similar profits, which for swing trading is very, very tough because the whole point of swing trading is having big winners and small losses. And you get maybe one position per month that goes to 5%, let's say, and most other ones are small profits, break-evens, or losses. So Ola Prime doesn't have the consistency rule, which in my opinion is pretty good. As far as my stocks go, so I have started to dabble into stocks. Whoa, this is now exploding up. What about GFS? GFS looks good as well. So I have been looking at the stock market. I am in CAT, which is Caterpillar. My approach is very simple. So I look at a push up, I look at the consolidation phase, and then I search for a breakout out of the consolidation phase. So on GFS, this would be the breakout. On VSH, you're getting a breakout right now. So the entry could be, I don't know, you could enter here with the stop loss like this. Could be a nice trade. So simple breakouts, just starting to dabble into simple breakouts and seeing how I do. And by the way, what helps with trading stocks is the stock box. So the way I scan for these big moves, for these consolidations, and for a possible breakout is you can use the heat maps. See? So here you have the daily, the weekly, and the monthly heat map. It shows you the best winners. So you just open all of these in TradingView and you see, do any of them match your criteria? And also what you can do is you can search all of the stocks in the stock scorecard. If it turns out bullish, that's a great confluence to have. So if you want to get the stock box, there will be a link in the description as well. And you can use the code Marco to get 25% off. Okay, so code Marco gets you 25% off. Check it out. Going back to the main, what is it? Like the main menu. USD/JPY is approaching 160, isn't it? Yep, it's getting there. So I don't know. I'm getting a bit hesitant. My initial game plan was to sell at 161, and maybe I don't really have the confidence to get in. I don't know. I think selling at 161 could be a good play. I'm just worried about getting stuck in the position for a longer time. So maybe waiting for next week, thinking about it, I don't know. I'll have to see. I'll have to see about USD JPY. The initial plan was definitely to sell at 161. What I could do absolutely is I could go in with a small position, kind of a feeler position, and then stack on top of that as we continue grinding to the upside. So maybe sell another at 161.5, then sell some more at 162. Could be nice. The main reason I want to sell is if you look at the last time, we had the same thing. So we had the initial move into 160. Then we had the big drop lower. We had the first intervention. Then we trickled to the upside. So started slowly grinding higher. And then we hit 161, or we hit 1.5 actually. And then we had the drop. So then we had the massive sell-off. I would love to try and position myself in here, right? I think that would be great. So that's the general game plan as far as USD JPY goes. Now for the Nikkei, I love the Nikkei. I think it's super bullish. It's also moving very nicely, kind of inside of this range, and it just broke out of the range, which is super bullish. I did miss the boat. So I missed the entry in May. I missed the entry in June because I was at that time I was getting a bit bearish on stocks. The Edge Finder did not produce a bullish reading. What about now? So let's take a look. Nikkei. Neutral. What about the Nas? Bullish. Okay. So the Nasdaq is bullish. The Nikkei is neutral. See the Nas. We can move it back. Absolutely. Let's put it back on the watch list. Well, the Nasdaq is actually hovering near the 20 EMA, which is not a bad sign. It's kind of a good entry area. So buying the Nas right now is not such a crazy trade to have. The Nikkei though, I would need a pullback. The Nikkei is definitely overextended right now. Yeah, absolutely. And I would prefer, of course, to get a bullish print. So let's go to Nikkei. I would, of course, love to get a bullish print on the Edge Finder, which is something that I would definitely need to get. Let's see comments. If you guys have any chart requests, anything you want me to bring up, put it in the comment section. Let's see. If the war is to blame for inflation right now and deal gets signed, isn't USD likely to reduce because this will lead to disinflation for the remaining of the year? Well, that is a good observation, absolutely. And probably the dollar would sell off if we did get a deal, but it has been 37 times already that a deal was announced and no deal happened. It was even supposed to be like the signing of the document was supposed to be moved from Friday to, I think, yesterday. It didn't happen. There's no words out of Iran. There's no talk about the nuclear stuff. Trump has kind of signed the deal with himself. So personally, there's a lot of conflicting evidence. There's a lot of conflicting news sources. I just don't know what to believe. I'm sticking to the data. And the data is telling me there has been 37 times already that a deal was announced and no deal happened. I think the same thing could keep on happening. Okay, the same thing could absolutely keep on happening. That's why by the end of this year, I don't know, for me, it doesn't seem to be getting any better. And I don't think, unfortunately, that it's going to get any better. That means inflation will continue. So let's go to economic data, inflation, CPI, USD, 4.2%, very, very high, very, very elevated inflation. What about the PPI? 6.5%, again, very, very high inflation. If the conflict remains, this could just continue going up or it could stay elevated. So the saying is true. The saying is whatever you're trading the Middle East. That's true. Everything is connected with the Middle East. And if we do get an actual resolution, an actual end of the war, dollar will drop, stocks will go up even more, oil will go down even more. I mean, oil has been going down a lot. I also think this is kind of premature, like the drop in Brent. We're almost back to the pre-war levels. I know there's a couple of traders that actually bought oil because they're betting that this move is overextended, because they're betting that this move has no basis, because they're betting the deal is not real. So that is a nice trade, but I'm trying to stay away from geopolitics as much as I can. Stay away from anticipating what Trump has to say. Depends how bad the USA was affected by it. They'll have to wait and see how the economy reacts, then hike or cut accordingly. I caught a dip on the Nikkei both times, Marco. Awesome. That's amazing. So congratulations. Maybe Japan is isolated completely. I mean, maybe like we don't even need to maybe the correlation between a possible drop in the NAS or in the S&P does not really concern the Nikkei. I know that the Nikkei has been very, very flat in, let's say, the 90s. It only started to move up aggressively recently. There's a lot of capital flowing into Japan. The current administration is dovish. So the Nikkei could be the star of the show for the next few, maybe even years. And if you do a quick comparison of the S&P and the Nikkei, so from 2022, the Nikkei has been crushing the S&P. Like the Nikkei is up 158, S&P is up 68. What about the NAS? Can we look at the NAS? It's even better than the Nasdaq. So, I mean, that's amazing. So I think the Nikkei was lagging behind for a very long time, and now it's started to wake up, and it's ready, or it's already moving. It's already exploding up. That's why it's my favorite index at the moment, or my favorite index for 2026. Absolutely. Both times missed a few orders. Well, it's never gonna be perfect, but as long as you caught it, that's great. Did I cover oil? So oil, just a summary. I did talk about it, but just a summary. I think geopolitics are very tough to read, almost impossible to read. Trump has a new deal every single week. I think this move is overextended. I think this move has no real basis behind it. So I think it's an exaggeration. So I'm not looking to trade it at all, but I would be more bullish than bearish because we're now near the pre-war levels, right? But we don't have a real deal in sight. The Strait of Hormuz is still closed. There's still like 20 or at least 10% of the world's oil is still not circulating. I think this is just euphoria. What I can't believe is that the market is again believing Trump. Marco, how do you read the dot plot? Can you explain if possible? Thank you. Yeah, sure, no worries. I think that's actually a good question. So Fed dot plot. Let's look at the last one. June 17th. So if you go to the document, this is the dot plot. Okay. And all of these dots, they are votes. There's 18 people voting for every stage. So you get 2026, 27, 28, and longer run. Essentially, you're looking for the middle. So you're trying to count the dots and you're trying to find the middle. For 26, I would say the middle is 3.6, 3.7. For 27, the middle is somewhere around 3.5, 3.6. Then for 28, 3.4. And for the longer run, 3.1. So that's pretty much it. And what you're looking at from dot plot to dot plot, you're looking at how the dots have moved. Have they net moved up? Or have they net moved down? You're trying to find the average, and then you're looking at, has it been revised up or has it been revised down? In this case, it has been revised up. So if we go to the Fed dot plot 2026 March, I think. Yeah, March. This is the last one. So you can see a clear difference. This is the last one. This is the new one. Can you see some dots appearing above 4.0? Look at this. So there's no votes above 4.0 in the previous dot plot, but in the current one, there's dots starting to appear above 4.0, which means the projection for the interest rate has been revised up, which means a hawkish dot plot, right? Yeah, definitely a hawkish dot plot. Even the longer run moved up a bit, didn't it? Let me see. No, it's still the same. The longer run is still the same. Marco do Looney. I'm not sure what Looney is. So if you can just give me the ticker. Is that the British pound or something like that? CAD. I like USD CAD. I think CAD is super weak. I would love to buy USD CAD, but of course it's overextended. I think it moved up too much. So it's very far away from the 20 MA. That's not good. Well, it's good, but it's not good for an entry. I would have to wait for a pullback. So I would have to wait for a pullback or a correction to this level of support. That is something that I would like to see, okay, on the USD CAD. But I think the strongest currency at the moment is the US dollar, and the weakest currencies are CAD, GBP, and NZD. Can you arrange for Ola Prime account giveaway just like DNA funded? Yes, the A1 team is working behind the scenes with Ola Prime. We're trying to get some giveaways going, so you will be notified if we do manage to do something. But we're definitely working on it, or the team is working on it. I'm just presenting here on the stream. Let's see. Finally, good to see CAD dropping with oil. Yes, that is true. So there is a correlation between the Canadian dollar and the oil price. Okay, definite correlation right there. What do we have with the CAD? Aussie CAD? It's probably going to be Aussie yen. Okay, no, sorry, I meant CAD yen. Yeah. CAD CHF. Just give me 1 second to reply to James. Okay. So CAD Swiss, not doing much. What else do we have with the CAD? NZD CAD? Yeah. Euro CAD? Okay. I mean, the absolute best one is USD CAD, no doubt about it. I would say the only strong currency with the dollar is the Aussie. So Aussie CAD could be an interesting buy position, but I would much prefer USD CAD. BOJ is stupid, in my opinion. Well, they kind of don't do much. They just hike in very, very small increments, and it doesn't move the markets at all. How do you backtest? If that's the question for me, I used to be a big backtester. Nowadays, if I'm looking at something new, I do very little backtesting. I use the replay function on TradingView But for me, forward testing is much better. So I use minimum lots, I use very small position sizes, and then I go into the market and I try to get in with a very small position size and test it out that way. So forward testing, in my opinion, is like 5 times or 10 times as effective as back testing. You learn a lot for forward testing. Back testing, you can really skew the back test in your favor. Forward testing doesn't lie. You're essentially trading the strategy live. Let's see. So you guys take care. Goodbye, Sima. I trade M1, by far the hardest time frame. Most traders fear it. I wouldn't go anywhere near. So I wouldn't go anywhere near the 1 minute because the swaps, the spreads, the commission. I don't know. If you're with a retail broker and you're trading on the M1, good luck. Your commission and spreads and swaps will be off the chart. You have to have a very, very high edge, or you need to have a professional account. With a lot of brokers, if you qualify, if you worked in financial services, or if you have $500,000 in the account, you get a professional status, and the spreads, the swaps, the commission goes drastically lower. So that's an option for sure. And especially like with prop firms, good luck with the 1 minute. Prop firms skim you alive if you trade lower time frames, because then they can ramp up the swaps, the fees, the commission, and everything. Fed Governor Mirren stepping down also made the lower dots go disappear. Okay, interesting. Not sure many people noticed that is true. Okay, so we do have the next show host coming up. So I'll leave you with Tiger. I wish you a great rest of your day. You can catch me tomorrow, and maybe Alan will be feeling a bit better so we can do a joint segment. Thank you very much for watching. Good luck in the markets, and that's it. See you.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Well, what's going on, everybody? Happy Thursday. I'm here dodging yet more storms, more tornado watches all around me. It's been the same for about a month and a half, and it's just another Thursday. We're used to it here. Kind of like I hear those of you in Florida area like to have hurricane parties. Well, we have tornado parties here, so good stuff. But so far, we're safe. We're safe for now. But hopefully I'm here tomorrow. We'll find out. But anyway, so if there's one thing I learned from Kevin Warsh yesterday, it's that there's a task force for that. He obviously used that line on about 5 or 6 questions that I saw, where the reporters were asking him a question about this or about that. And he says, well, there's a task force for that. He kept saying that, kind of like a deflection, but yeah, at the end of the day, he's creating these task force for all these different avenues. Said they'd be up and running here in about 3 weeks or so. I had the list right in front of me here just a minute ago. I was going to take a quick look here. As far as those 5 task force, they cover communications review, balance sheet, data sources and methodology, productivity and jobs, and inflation frameworks, looking at the drivers of inflation. So sounds like he has put them to work. I kind of joked yesterday that he sounds like that mean old substitute teacher that we all had in school. You know, the one. Okay, we all had him. Regular teacher was out sick for a couple days. We couldn't wait till they got back. That's kind of what he sounded like to me. So he means business. Sounded a little nervous throughout, but hey, at the end of the day, he's got a gigantic job on his hands. So hopefully he'll smoothen it out going forward. But anyway, guys, just kind of having a look at the Edge Finder. Let me know, by the way, if you have any tickers or anything you'd like me to bump to the top of the list, and I'll be sure to check them out. What's up, Bashy? What's up, Kirthan? Hello to you. Yeah, and guys, remember the 35% off code does exist, as always, for the account of your choice from Ola Prime. So definitely go check them out if you are looking for a really good firm. I've been affiliated with them a little bit here and there for about the past year, so really good stuff. I've got one of their accounts, one of their 100K 2-step Prime accounts, and I really, really like it. Good stuff. So the code is there on the screen, A1 Live, that you can punch in the second spot on the codes like we looked at earlier in the week, or you got a QR code as well. So taking a look, we've had a few things bump on the list here this morning, guys. Getting a little bit more of a stash, if you will. Bitcoin, look at that. Bitcoin's back on the list. Definitely want to look at that. S&P finally made it. I told you guys yesterday if Dow and Nasdaq was on the list, surely that one's not far behind it. And sure enough, it's jumped on there. Dollar CAD is back on. We got some FTSE 100. Okay. All right. Let's take a look at these items. And then we got still pretty similar, pretty much the same stuff on the short side as far as bearish bias items. So we'll have a look at some of these newer ones on the list and kind of see where we're at. Did want to kind of start with gold first, just because you guys, if you remember, I had originally drawn up 2 zones on this thing. So let me see, daily, it was the 4-hour. I had originally had this zone right here drawn up as well. And I told you guys I didn't personally like it just because of, well, number one, there's an inefficiency a little bit higher up, which is the main zone I'm looking at, the daily 4-hour a little higher. 1-hour confluence, which was that white line there, but I'm sticking with the proximal lines of those zones since they are pretty well at the same spot. So nothing has changed, but I was for a while looking at this zone down here. But remember, the thing that I personally didn't like was all of the 2 days worth of kind of an equilibrium spot there, okay, or a little bit of a fair market value for a couple of days. So that right there was personally why I didn't want to take a short here. Not to mention the higher up inefficiency, the more expensive inefficiency up here. And this is exactly why, okay? Because a lot of times when you get those equilibrium spots, they kind of act as a black hole. I don't know how else to explain it, but the prices act like a magnet, these zones, these consolidations, okay, these equilibrium points. And then you get back up into that area, the magnet sucks you in, and then you're stuck there for a while. So we did obviously get a decline yesterday from Kevin Warsh's speech, but we dropped right into I would call it a weak zone of demand right here, where we did have a gap up into that supply, that black hole I was telling you about. But we did it on very low volume. So not a threat at all, this demand zone, if you ask me, but despite it, we still did see a little bit of a retracement from it after kind of the fallout of the Kevin Warsh conference. And then we've since kind of bounced around sideways a little bit. So when it comes to gold, because I know that's one of the popular ones you guys ask about, sticking with my plan up here. I've kind of already got it mapped out. Would love to see a little bit more manipulation here. I like that it came down first. I like that it came down and kind of took away what liquidity existed under here from these buyers that were fighting the sellers. Remember, that creates liquidity on both sides, not only down here from the buyers, but up here with the sellers. So my goal or my wish is that we do get a bounce from this weak demand zone, and we kind of push back up in, take away this liquidity, these buy orders that are hanging out up here, which is their stop losses from the short sellers, buy orders to fuel the sell orders along with the unfilled orders, and we get a short. Okay, so that still remains my favorite view of gold as we speak. Very easy to see take profit down here at this demand. So make sure and close out just ahead of it. So that remains my trick going into, well, next week, preferably. I would like to see this wait and bounce in on a Sunday evening or a Monday morning so that I can have 5 proper days of it to do its thing. So, yeah, that is gold there. Let me double check the chat real quick. Oil. Ashley wants to look at some oil. Yeah, well, we've gotten quite the drop. And it's pretty well going. Let's go look at oil. It's pretty well going down to where I kind of suspected it might, because remember, we had the week 4-hour supply zone, demand zone rather, I told you guys about. And I told you it could potentially turn into a little bit of a flip zone. It did kind of wick back up into that zone, and now the bottom's falling out. So 73.34 right now. And I told you guys that I was, I was projecting or considering that it might drop all the way down to 67, because that's really where the pre-war demand zone was before we had this big gap up when the bombs started flying back at, what was that, February 28th, I think? That was a Saturday. So the next open of the markets was, March 1st. Okay, Sunday. And that's when we saw prices fly up. I mean, just go crazy all the way up to $120 a barrel there for a while. But I'm still looking to see if we can continue to push down. And once we get down here, as far as oil goes, as far as I'm concerned, I think we just have to reevaluate it. Because I don't think there's much in the way of keeping it up as far as demand zones. I see this. I personally think it's going to continue falling all the way back down. And I kind of drew these squiggly lines because, again, we just have to reevaluate it. I mean, it's pretty well, I do believe we're still getting neutral rating, are we not? That didn't pop on our list, did it? I didn't think so. Yeah. So pretty well neutral when it comes to the fundamentals and the sentiment. But clear, we're in a clear downtrend. There's no question. But yeah, I think that we've got some pretty decent volume over here that created these demand zones. Once we get down here, and Nick says this once in a while on certain assets, we could just see a sideways movement for a while. I don't know what you guys think, but we're getting down to the pre-war levels, so just got to reevaluate. Okay, but yeah, I definitely think we have at least, or feel like we have at least another $7 or $8 a barrel that we could see drop. The only tiny thing I see that could possibly give us a bounce on oil is this blue line you see right here, this blue dashed line. That tells me there's a former support resistance line somewhere in the past. So looks like I drew it up right here. Okay. So this you're talking back on April Fool's Day of 2025. Okay. So that would be this spot here where we did have the bottom fell out of it. Was that Liberation Day? April? That was April, wasn't it? Liberation Day, like around the April. Getting my months jumbled up in my head, but nevertheless, we had a big, strong drop. You guys would agree, okay? So that is coming into play very quickly. So possibly we could see a little bit of a bounce out of that, but if not, 67 it is, 67.5 at least, because that's where that 4-hour demand kind of peaks up a little higher than the daily demand below. So that's my look on oil. If you're just looking at just the technical only play, I don't know that we really have any great supply areas here unless we literally come all the way back up to, the 88 half level. When you look at this wick right here, I've already went down to a 5-minute time frame and there's just nothing there. So it's just kind of slow. Hey, look, it's a good thing. We're getting a peace deal. So, it's not the official peace deal, but it's basically the 60-day period to kind of evaluate, make sure the Irans behave and so on and so forth. So that got signed for President Trump at dinner last night in Versailles. How do you guys say that? Versailles, France, at dinner. So that piece is signed, and the counterpart on Iran was verified that he signed it as well. So it's officially in, guys. I mean, we should start seeing some oil flow and oil dropping even more. So let's get down to those pre-war levels, in my opinion, which is going to be that demand area. And then we'll just have to reevaluate from there. So hope that helps. That's the way I see it anyway. Don't really have a reason to buy or sell this asset. It's just kind of neutral, but definitely feel like it's going to drop. Dollar CAD, pound dollar shorts, GU short, great sell. Okay. Yeah. We can take a look at that as well. like a drip on oil slowly dripping down. It is. Yeah. I mean, the thing is, we're not getting any expanded range candles down. So it's just those slow, small, boring candles. Remember, when I look for a supply zone to short in this example, I have to see a big expanded range candle, something like this over here, something like this over here. That has to exit a basing structure for me to count it as a supply zone. Okay? Speaking of supply zones, I told you guys yesterday about the 8 different ways to look at supply and demand zones. I don't have a graphic, but I do have a list that I remember that I put into my trading plan towards the bottom. So we can definitely go over that here in a moment as well. It's just text, but I can at least kind of verbalize it to you. We've already talked about half of those zones already. I talk about them every day, but there's a couple that I don't really point out as much. So we'll look at that here in a second as well. But first, let's get the dollar CAD, says Bashi, since that's back on our bullish list. Go flip over here to my FX side. Dollar CAD, dollar CAD. And you know what? Also, another thing I like to do when it comes to the U.S. currencies, I like to open up another trading view page and then just go down here to my 8 chart look to where we just have just the U.S. dollar pairs here. Okay, got the 4 pairs where the dollar is the quote currency on the top, and then you got the 3 pairs where the dollar is the base currency on the bottom left 3 there, and then the Dixie. So it's just something I've started doing when it comes to the majors, just so I can have a quick glance and see if anything is off. As long as they're all in line, then they're all in line. But every now and then you'll get an asset that's just completely doing the opposite because of the other currency. There's something going on with it. So sometimes I like to go over this chart just to see what's out of line, out of whack, and if it's near a supply or demand zone, I can maybe exploit that, take advantage of it. So, but anyway, let's just go back and focus on dollar CAD for you. So clearly the trend is up. I don't even have to worry about looking at my daily. So we'll just leave it here on a 4-hour. I have you know what? I still have those old zones that we were talking about a week and a half, 2 weeks ago down here. This is a daily with that little green rectangle. That's a 2-hour confluence right there. It bounced into the daily supply and retraced a little bit before rebasing and giving us a really nice gap, acceleration gap. And that gap, that basing structure, helped us to chew through this daily demand. I mean, it took a few days, but it did eventually break through. So, with all this, it's just kind of a cluster. You know what? That zone right there in particular is given a nice gap, but there's not really the greatest volume on the expanded range candle coming out. That is the one that broke and closed above the rest of that daily supply. So I do want to keep an eye on this area. I just don't have a whole lot of reason to when it comes to the effort result relationship. Okay. Again, we're looking at this green candle. That's just average volume. I want my legs out to give me above average volume, ultra high volume. Okay. That's what tends to get the best moves when it comes to revisiting those zones. And that's just not that. But it broke the structure. So I still want to keep an eye on it. And, if price were to drop all the way down there, maybe make sure it's giving me a very strong bullish engulfing candle or candle with a wick on the bottom, a hammer candle, inside bar, strong leg out of that, something like that, or even a confirmation entry. But that's a long ways away. What about anything nearby? Well, this expanded range candle gave us a lot of volume. I like that. So is there any power at the base of it? This right here is not really a good looking base because it just kind of was a handful of candles that just kind of went up. In other words, they didn't base. They didn't go sideways for a short while like you see back here. Okay. So I already don't like the picture, but let's go down to a 1 hour. Okay. So that's a 2 hour, 1 hour. Yeah. And here's the thing. This is by definition a demand zone right here. You got a couple candles of basing action. Obviously, you had the strong 2 candles out with big red bars. That's what I want to see right there. The only downfall is it's a very skinny base. I wish this red candle were more the size of like this over here. I really do. But what I could do is wrap this all into these 2 1 hour candles right here. Oh, there goes my thunder if you guys can hear it. Yep, getting loud again. We're destined for storms, But about the closest thing I can see on dollar CAD would be this structure here, this basing. Yeah, there's no denying how strong of a move out that is. And what does that probably mean? Do you think that's a few retail traders right there? There's probably some retail traders, obviously, because that was, that was during the rate release yesterday where we saw the dollar fly up. A lot of institutional type volume there as well. It was a screamer of a move on the dollar-based assets. And then we finally kind of based and went sideways. So, yeah, kind of like I was waiting on pound dollar to revisit the 2-hour supply where the non-farm payroll from 2 weeks ago or almost 3 weeks ago at this point kind of started. This is kind of a similar picture, but now we're just looking at the rate decision, the rate release. So, yeah, take me back to the rate release, and we might have a trade there. Again, I just dislike how skinny this candle is, so I kind of have to lump it in. I'll have to give it a decent stop loss, guys. I won't just put a stop loss a few pips below. I'll probably widen it and put it down a little deeper. Give us some wiggle room. That way it's got time to see if these unfilled order potential might give it a boost up. But do I want price just to fall straight down into the zone and then smash the buy button? No. Relative to the structure, I feel like it's gotten away quite a distance. So what I would like to see is price come down, and it can come down fast if it wants, but I want to see it kind of slow down at some point and kind of give me those, a little bit of a basing structure and some expansion legs, taking out the highs, taking out the lows, and then do a final drop in for the buy. That's what I want to see. In other words, we get this structural, this sideways movement here, and then you get the expansion out to the downside to sweep liquidity, and then you get a push through to the top to sweep this liquidity, and then you get one final drop to sweep this liquidity here and the unfilled orders from the demand zone for a buy to the upside. That's what I would like to see here, just because it has moved away quite a distance because of the results from Kevin Walsh and talking about all 5 of his task forces all day. Okay. So that's how I see dollar CAD. Give me down to that 140, 40 level, 140.30. Might have a shot on my hands. In fact, I need to put an alert there. So thanks for calling out dollar CAD. Let's get that up there. And this will be probably prime target going into next week. For me personally, I'll just throw it out through the end of next Friday, 1600. That's when the market closes here in Kansas City, where I'm at. So that's what I'm looking at. The only other option is to see if we can get a deeper pull down to some of those earlier zones I was looking at, but it may not get there. Okay. So I may just want to take advantage of this highest one. Now it's higher than all these structural points back here. That's one thing I dislike, because you guys know I like to buy undervalue. Well, to me, this looks like kind of a 2-week, I don't want to call it an equilibrium, but it's just a very slow grind up. So that's why I would actually prefer these zones down here, because they're underneath all this mess. But again, confirmation entry, like I showed here in this example. Let's get that consolidation. Let's get those expansion legs testing liquidity. And then one final drop into the zone. Maybe we'll do a partial position. I don't think I would do a full position on this. Hope that helps. Bash, you have a good one, brother. GU, great sell. I'm Andrea. Yeah, I'm assuming you're talking about pound dollar. You asked about it the other day. So let's go look at that for you. So you guys remember, I personally was keeping an eye on this 2-hour supply zone. I missed the short because it missed the confluence. Okay, it missed my smaller time frame, missed it by just a few pips, and then look what happened. The bottom falls out of it. Obviously, these dollar-based pairs, where they were the quote currency, obviously saw declines like crazy. We just saw that over here. Okay, the ones on the top coming out. I think I even put little circles. Well, I guess it's not showing up here, but anyway, yeah, big giant drops. And again, now pretty much retraced on a handful of these back up. But nevertheless, we are currently chewing through this zone of demand underneath. Talking about this one here. If we go back into the Wayback Machine for just a bit, go back to April 7th. We did have a little bit of a basing structure here where they push up. That broke some structures. Okay. So that's the area where I just wanted to be aware of as far as a take profit if I were short this thing. But as you can see, we've chewed right through it like a hot knife through butter. Okay. So at this point, because it takes a lot of money to break structures, to break supply and demand zones, to break swing highs and lows, where's the strength? Well, my old alert was up here on a smaller time frame, but now I've got to keep an eye on this area here because this is where it kind of rebased, right? This is a drop-based drop, and that's where it rebased for a big drop that broke that demand. So I do want to keep an eye on this newly created supply zone here. It is low on the curve, so that's automatically one big red X. There's more inefficiencies much higher up, but look how far it came just to rebase. That's a long ways. It'd be different if this supply zone were up here somewhere. Okay. But the fact that it's pulled away so far from that expanded range candle before rebasing and then, again, kind of coiling and forming that strong push down that broke the structure and closed, I got to keep an eye on that. So I'm actually going to steal this alert, and I'm going to put it right here at the proximal line of that new 4-hour supply zone. Keep an eye on it. Might try to take a few pips out of that. The swing lows are much further down. Yeah, that might create an opportunity. And all of that because, guys, we broke this demand zone. Okay. Because we broke the demand zone, I'll keep an eye on that. Okay. That was pound dollar. Hopefully that helps. As always, guys, not financial advice. Do your own due diligence. Take what we say with a grain of salt. Yada, yada, yada. Do your own due diligence on this stuff. Okay. It can get pretty testy at times. I have a couple other zones up here, but on smaller time frames. But now that this is created, I'm basically going to ignore this one here probably. I don't know. What time frame did I do that on? 30, 15, 50. I think it was a 10-minute. Yeah. See, I drew this up, guys, when price was still right here. So now that price has based and dropped to another level, probably going to ignore that. But the reason I was watching this area kind of out in the middle of nowhere is because look at the volume. Look at the VSA down at the bottom. Red candles, yellow candles galore. And even up here at this higher up zone, that's where that first red candle formed on the leg out. So I want to still pay attention to these. And another way to look at it is maybe even a partial position here, a partial position here, partial position here. Ultimately have a stop loss above all this. I don't know. I don't do personally a lot of those. I like to just get it out of the way and settle on one zone. But that's an opportunity as well. DCA, dollar cost average, right? But again, when you dollar cost average, you got to make sure that you're giving it the wiggle room it needs when it comes to stop losses. So yeah, that's what I'm looking at, pound dollar. Just let's see what happens when we bounce firstly into this supply zone here. Do we get that that change of character, that break of structure to the downside? Something like this, where we break this structure here. If so, that basically turns this into that new impulse leg to the downside. And then we just simply look for a newly created supply zone to short it in. Okay. There's 1,001 ways to do this. That's just one of my personal favorites. If I can get that out of the way. I really like this one though. That's my favorite. My absolute favorite little strategy within a strategy. Break the structure with this candle, because if it doesn't and it stays up here, it'll just go right through. And then I'll avoid a loss because it did not break the structure. It did not give me half of the confidence to wait for a retracement to short it in. And then, of course, you get that new supply zone, typically somewhere in this area where you can actually short it. Okay. So that's your confirmation entry. That's one of my all-time favorite strategies. Real quick, guys, because I know the time's already almost out. Wanted to show you the 8 types of supply and demand zones, and I'll still make a graphic on this. But you guys already know the first one, fresh zone, guys. Okay, unmitigated. I don't want to trade a zone that's already been touched. It technically, if it's less than halfway punctured, a lot of people still trade them. I usually don't. You guys have seen me on the Bitcoin show that monthly, weekly, daily demand zone at the bottom. The only reason I consider that, because it had been punctured 50% from, I think, back in April. The only reason I consider the bottom half of that is because we're talking the bank's time frames, monthly, weekly, daily. Okay. It's not like it's a 5-minute or a 15-minute zone. Okay. So in general, when it comes to the actionable time frame, yeah, I want that thing to be clean. The 4-hour, the 1 hour, the 15-minute, I want it to be clean. Curve analysis, buy low, sell high. Okay. The zones, the demand zone has to be as close to the origin of that overall strong move up as possible. And I guess most of these are just positioning, not really that it's a brand new type of a zone, but it's they're all zones. It's just where are they at? Okay, so that's curve analysis. Demand zones at the bottom, supply zones as high as possible, where that first inefficiency in the market starts nearest that high low. Higher time frame, we all know this. Buy in line with the higher time frame. If it's an uptrend, I only want to look at demand zones. I have no business trying to short sell in a supply zone if I've got an uptrend. Guys, that's one of the first things we learn on day one of trading. Stacked zones. Okay, this is when I talk about confluences. I want to see a daily demand zone with a 4-hour demand zone inside of it. You guys hear me say that all the time. That's your stacked zones and in alignment with the higher time frame. Inducement. What the hell is that? Well, that's liquidity in front of a zone. I kind of already mentioned that over here. Or let's see, what did I do? Dollar CAD, I think it was. Yeah, this is inducement right here, guys. When you have basing, we're looking at that demand zone. Okay, the demand zone, push up. Price, when it comes down, the last thing I want is for it to just come in hot and heavy, because oftentimes it'll just chew right through it like a hot knife through butter. I want to see it start slowing down, though. Okay, start slowing down, get the basing. And again, when you test liquidity on either side of this, that's basically inducement. Because you're tricking the retail crowd into doing something and then flipping the script on them. Okay, that's liquidity hunts. That's inducement. And then obviously wait for the demand to push up. And then we go into, let's do break a structure, because you guys hear me say this all the time. That zone has to break a structure. Okay, I need to see a zone take out an opposing zone, or a swing high, swing low, or a, the top end or the low end of a curve, or whatever the case is. Break a structure. Change of character. Okay, if we're in a downtrend and we're breaking that structure to the upside, that's a change of character. It's got to take out a structure. Flip zone, that's what I kind of flirted with yesterday. I mentioned this to you guys. A flip zone is very simple. You get price pushing up and then basing and then pushing up, which forms the demand zone. But then when price drops, okay, there's got to be buyers buying just because it's a demand zone. But what can often happen is you get that congestion inside and then it flips. It turns into a supply zone, and then you wait for that retracement. Remember, a zone is not a zone just from the consolidation. It's only a zone when you get that strong move out like this, or when you get this strong move out like this. When price is still here, it's not a supply zone yet. You got to get that push up, that strong push up, and then the retracement. That's your flip zone, ladies and gents. And then the last one, sweep zones. Guys, this is something I've not talked about a lot, or I don't think at all with you guys. This is basically something used around Wyckoff method when you get a big decline and the banks, the institutions start accumulating their positions. Okay, there's a series of movements, and I'm not even going to get into it because it can get crazy. But at some point, oftentimes, when you get that basing and consolidating, oftentimes you'll get a big, what's called a spring, which means a push through all that, and that's the last spot where the liquidity has been swept. Oftentimes, those create demand zones or supply zones. If this is all flipped, that's called your up thrust. And then from there, you just get prices start launching and lifting off like crazy. You get a return to those, woohoo! They turn into some good zones, ladies and gents. But again, that's more Wyckoff theory stuff. It's very in-depth. I don't want to get into that. And I'm out of time, so I can't anyway. Ladies and gents, hope you learned something today. Have a wonderful Thursday. We will be back tomorrow, I do believe, right? Yeah, I know it's a holiday, but I think we're still in. Take care. Trade safe. Talk to you tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.